has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
This morning, it is not the number of firings, it is rather the percent of firings as companies worldwide, they adapt, they adjust to the pandemic and beyond. Royal Dutch Shell, well, they say there are too many layers, too many levels of employees. We have claims this morning, an update at 8:30 with Michael McKee. McConnell, well, he says it's unacceptable. No, not the Democrats' trillions of stimulus. Rather, the President of the United States' indirect and direct support of white supremacy. And on that stimulus, there is hope. Nancy Pelosi with David Weston at 12 noon today. Good morning, everyone. This is Bloomberg Surveillance from New York, from London. A special show as we speak here in moments with Ian Bremmer on their AXA Eurasia Group report. And Francine, what I love about the report is it talks about the unknown unspeakables of this pandemic, the state of our labor fragility, the state of our mental health condition as we all have struggled since February.
Yeah, Tom, I'm really looking forward to speaking to Ian a bit more about this AXA Eurasia report. I guess the question is, if you look at financial risks, I think it's all the way at the bottom of the list, and you wonder whether we're talking so much about health risks and the pandemic that we ignore the next black swan. The other thing is that the EU, Tom, started these legal proceedings against the UK, so we need to talk about Brexit with Ian as well.
Yeah, well, Brexit as well. Ms. van der Leyen speaking. And are we on a watch, Francine, for the Prime Minister of Ireland? Are we we're camered up in Dublin waiting for comments from Ireland, right?
Yes, we have a new leaders summit, and we're expecting him to come out also to talk about, the internal markets bill, which the president of the commission came out in full force against.
Pound sterling now 128.47, a bit weak today. With our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Francine. President Trump signed stopgap legislation that will avert a government shutdown. It will keep the government operating at current spending levels through December 11th. The country's spending authority expired at midnight. Neither Democrats nor Republicans wanted a shutdown weeks before the election. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin say they've made progress on a compromise stimulus bill. They plan to continue negotiations. Mnuchin tells Fox he sees an agreement costing as much as $2.2 trillion. And the European Union has started legal action against the UK over Brexit. Bloomberg's learned the EU will send a letter accusing the UK of breaching the terms of agreement and breaking international law. It's the first step in a process that could end up in a lawsuit at the European Court of Justice. And the Tokyo Stock Exchange halted trading for the entire day because of a hardware breakdown. It's the worst ever outage for the world's third largest exchange. The operator of the Tokyo Exchange hopes to resume trading as normal on Friday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. We're looking for signs here in the fourth quarter recovery. The data right now matters, but what really matters is Pepsi-Cola giving us an organic revenue growth statistic. This is one of those tea leaves, those signs out of and into a new quarter that really matter. The Pepsi-Cola third quarter organic revenue is up 4.2%. And that's really not all that bad a statistic. Maybe that's some of that optimism of an earnings recovery. Gina Martin-Adams scheduled to be with us here in a bit. There's a lift to the market. Futures up 34, Dow futures up 265. Pound sterling is crushed the right word, Francine?
I don't know if I would call it crushed, but certainly sensitive to any news. We could see it even go lower depending on what happens in these negotiations. I'm looking at, so Brexit concerns, weakening pound, the dollar pretty much steady, and then U.S. futures actually climbing on these potential sign of progress in Washington towards a fresh fiscal stimulus package. What's interesting is that a lot of industries in Europe just don't believe that will be the case, Tom.
Francine, thank you so much. Again, futures up 33. There are reports, they come out. This is the time of year. It's autumn. We're all back from the summer. Everybody but Ian Bremmer, he's still out at the summer place. And there is courage within reports. It's real simple. The public, well, they feel most vulnerable to health and computer-related risks. Without question, we've identified this. Public authorities in Asia Pacific are considered the best prepared. And then here's the heart of the matter, as Simon Kennedy spoke about in the last hour, the fact that white-collar workers could safely work from home or their summer place, but blue-collar could not, and that this undermines social cohesion. This is an exceptionally brave and different report from AXA, the French insurance giant, in support of Ian Bremmer and Eurasia Group. And we're thrilled that Dr. Bremmer could join us this morning on this. Ian, I'm going to cut to the chase. You guys have the courage to get away from the math, which is fine. People have done that great. And you talk about the social harm and the mental health exhaustion of this pandemic. What did you learn?
Just the extraordinary acceleration of inequality, how much this is being borne on the backs of those that cannot participate in the knowledge economy. I mean, we know that technology has been disrupting people and their jobs, but this pandemic has made it very clear that for large percentages of advanced industrial economies populations, we're not talking about a fourth industrial revolution, we're talking about a post-industrial revolution. And as you see the layoffs that go from furlough to permanent, from Disney, from the petro companies yesterday, from all of the airlines coming real soon. These are some of the people that are in the most challenging positions in the U.S. and the European economies and elsewhere. These are jobs that are not coming back. These are people that don't have the training, don't have the skill set to retool themselves into the jobs that are opening up in other places, and they're going to get angry. It's not largely a 2020 risk, it's largely a future risk, because you're placing these people in precarious positions in societies when governments are not going to continue to put forward the kind of relief that actually they all have been able to do in the first 6 months of this pandemic. We haven't seen anything yet.
Dr. Bremmer, we're all in an uproar about the debate, and of course, Steve Scully trying to get to October 15th in the town hall meeting in Miami. The fact is, and Jennifer Rubin, folks, was outstanding at the Washington Post on the fragilities of the president under those very bright lights. The fact is, Donald Trump represents a Lockean American spirit, the idea of an individualistic, go-for-yourself tone. Is that dead out of this pandemic?
Well, I mean, he says he represents that, but of course, I mean, he doesn't. I mean, the idea that government should be small and should be independent as an arbiter and people need to make their own way. But if you look at cabinet under Trump, of course, it's massively staffed with high-level figures from the private sector who are very interested in ensuring that big corporations get preferential treatment. That's not a Lockean environment. That's one where the people who are lucky enough to be behind the gates can ensure that their kids also are behind the gates. Their companies get behind the gates. And that's, by the way, that's why Trump got elected, is people were so angry that that system was so pervasive in the United States. Compared to the other OECD economies, you can better predict a person's wealth in the U.S. by the wealth of their parents than in any other OECD country. That's not the way it was in the 70s. In the 70s, there was much more mobility in the U.S. than there was in the UK and continental Europe. And in 4 years of President Trump, that's become greater, that system, not less. So I take the point that ideologically you have this Lockean message from Trump. He's great at the brand of giving the people the red meat they want. But let's face it, if it's all about bread and circuses, they're running out of bread. And so he's relying more on the circuses.
Ian, when would you be comfortable in actually calling the election? And do you look at some of the underlying questions that people will see, or do you trust the polls?
Look, I trust the polls. I trusted the polls in 2016, but those are probabilities. I feel quite comfortable calling that Biden is well ahead and will remain well ahead. I mean, if it was as of today, it'd be 65-35 Biden, but that's only calling the election on the basis of who's voting and are all the votes counted. I think it is almost certain that the election will be contested by the loser, whoever the loser is. The pandemic ensures that. The challenge of counting in a pandemic ensures that, and the fact that President Trump is doing everything possible to politicize who votes in person and who votes by mail. It's, very similar to how he's politicized the response to coronavirus itself, and it almost guarantees that this election has an asterisk on it.
All right, Ian, thank you so much. Ian Bremmer there of Eurasia Group, and G0 Media stays with us. Now, our Maria Tadeo also caught up with the Dutch Prime Minister Mark Rutte in Brussels.
Hij vergaderde geleden in Brussel, dus dat lijkt me iets van het parlement. En wij hebben het bord al vol genoeg liggen om niet ook nog de problemen van het parlement daarbij te pakken.
Nog één korte vraag. Waarom heeft Nederland zo'n moeite met die term strategische autonomie? Is dat het liberale?
Nee, ik heb daar geen moeite mee. Maar ik zie wel degelijk dat er vraagstukken zijn te beantwoorden rondom strategische autonomie. Level playing field, oneerlijke bevoordeling van bedrijven in andere delen van de wereld.
Oh, my Dutch is failing me there right now, Francine. I'm trying. Mr. Rutte chastised me in Davos over my Dutch. Francine, explain to our audience why Mr. Rutte is so important.
Well, Tom, he was part of the, frugal four, so the countries that didn't want the EU recovery plan at first because they thought that some of the countries that would have access to the funds would squander them. There's also fights between the Netherlands and other European countries about taxation and how you would go into it. A couple of key points, Tom, is, of course, Brexit, because there is an EU leader summit, and it is also the day where the EU leaders, or actually the Commission, sent a letter to the UK saying we're, legally challenging your internal bill, which basically reneges on the withdrawal bill agreement, Tom. So it means that there's a lot more acrimony when it comes to Brexit and the negotiations between the EU and the UK. I think the next question is for Maria Tadeo, who's speaking to Mark Rutte in English, Tom. Let's listen in.
I wonder what's your take on that, and do you think it makes a potential deal more difficult?
Well, I think we are making a little bit too much out of it. I believe it is a logical administrative next step, given the fact that this particular law has now passed so many stages in the UK Parliament. I believe it is now moving to the House of Lords. So my understanding is that this is a administrative and legal step the Commission is taking, which is also within its remit at this stage of the bill being pushed forward in the UK Parliament. I don't think it will influence to a large extent the negotiations at the moment with London.
But the announcement has made, and you see it in reactions across the world, investors, markets, the business community very nervous this morning. So your message to them is don't read too much into this. The negotiation is still ongoing.
Yes, so I completely understand why the Commission is doing this. This is in their power to do, and it makes sense that this administrative step is now taken, but it is up to the Commission. So I leave it there, and I would not read too much into it, as that it is a sort of signal in its own right. I believe it had to be done given the fact where the bill is now, and it should not influence too much the negotiations with the UK.
And the deal is possible. When do you think there's an actual real deadline where you say it really needs to be ready by this time?
Well, it helps if it is done before the end of the year. No, I'm not going to commit myself to a date. The sooner the better. And I believe we all agree that somewhere in October it would be nice to have at least the general outline and the details of a deal ready. That's very much necessary because we have to prepare for eventualities. And it's now up. I think the European Union is willing to close a deal. We are really willing to do that. We are committed, we are united, we are completely standing behind the Commission and Michel Barnier as our chief negotiator. But it's now up to London also to show that they are also serious about this and willing to close a deal. I believe it is very much also in their own interests to do that.
And just a final question. In July, of course, with the recovery fund, we're here for 5 days, where you didn't sleep for 5 days. Hopefully we don't get a rerun of that.
No.
But there's real concerns now that the payments that are pegged to that recovery fund could be delayed. Now it's Viktor Orban who seems to be the problematic leader in Europe. What's your message to him, but also the rest of the European Union when it comes to those payments, very much pegged to rule of law?
Well, the July deal was a package, and I was able, and it was not easy, to secure a political majority in my parliament for that deal. Of course, the official ratification of the own resources decision has to be taken later, but at this stage there's political commitment in the Dutch parliament on the complete package agreed in July. Part of that package, and part and parcel of the package, is the rule of law conditionality, which is now being put on paper, detailed, hammered out. And it's not unusual that at that stage you have some thorough debates about the nitty-gritty details of what is being put on paper. There is now a German proposal to come to an agreement within the Council and with the European Parliament. We think that that proposal is not yet at a level we want it to be. But we generally, of course, very much support Germany in trying to reach a deal. But we don't think that this proposal is good enough. It should be better. And we also hope, of course, that the European Parliament will be very tough on this and will also be committed to make sure that we stay close, very close to what we agreed in July.
So there's a real risk that the payments could be delayed. I mean, that this recovery fund may not be operational by January. That could happen.
In theory, everything can happen, but nobody wants that. Everybody, I think, wants to make sure that what we agreed politically in July is also legally put on paper now these days and weeks, and is then ratified by the respective parliaments of the member states. And that is still possible.
No problem, Minister. Thank you very much.
Thank you.
Thank you.
Okay, that was Mark Rutte, the Prime Minister of the Netherlands, speaking to our Maria today over in Brussels. We also heard from the Prime Minister of Ireland a little bit earlier on. Ian Bremmer, President of Eurasia Group and G0 Media, is still with us. Ian, how ugly can Brexit become?
First of all, I'm shocked. I mean, that Tom doesn't speak Dutch. He's 6'5". I thought that was genetically required.
Yeah.
It can obviously become worse. I mean, it's a pretty closely held question now as to whether they end up crashing out at the end of the year or not. As Mark Rutte said, the response, the legal response to this British move, the legal action is pretty pro forma. It doesn't stop the negotiations. It doesn't stop Brussels from wanting to get a deal done. And they've not overreacted at any point here. But, of course, Boris Johnson is facing a much more difficult fight internally within his own Conservative Party. He's starting to face a real challenge in terms of Labour becoming much more positive, of course, now that they've gotten rid of truly deplorable leadership. And he's also had a much harder time responding to coronavirus, really the worst response that we've seen across the entirety of Europe, all of which means that the question mark around whether we get a deal is going to be much more born on what happens in London and the UK than what happens in the continent. 'Twas ever thus since 2016.
Ian, I want to go back to something that you were telling me before we went to Mark Rutte, which is you're expecting a U.S. election that will be contested no matter what. I mean, how ugly can that be? Would it actually, make a lot of foreign powers look at the U.S. differently?
I think it depends on how close the election is. I mean, it's possible that Biden will be declared the winner on the day if he's able to win Florida because they count all the absentee ballots as they come in there. But Trump would still contest that. It's also possible that the contesting of the election would be within the margin of error of things that we haven't actually counted, couldn't count until votes come in, absentee ballots, vastly more than we usually see over the course of weeks or more. And if that happens, we're in a lot of trouble, right? If that happens, you could easily see a constitutional crisis. Yes, I think that the rest of the world looks at America differently. By the way, they look at America differently, not just because of this election, not just because of the shambolic debate that really no one should have watched because it's bad for our mental health from a couple of evenings ago, but rather because of the steady deterioration of institutional legitimacy in so many areas of the American political franchise. I mean, the military still works quite well. The judiciary still supports rule of law, though it's somewhat more politicized. But if you look at the way that elections are running, you look at the inability of Congress to govern together, you look at the removal of inspectors general, the civil service, the politicization of those that run it, the level of high-level corruption, and of course the way the executive is running itself. All of that implies that the United States is less of a representative democracy. And no, we're not about to become an authoritarian state, but we are increasingly a hybrid system, a mixed system. And that's not a system that the rest of the world is going to look to and say, oh, we want a political system that looks like that. Are you kidding me? Of course not.
In the time we've got left, and again, folks, in support of the AXA Future Risks Report, what this is about is this wistful feeling of getting back to what we knew. And that may be January of 2020, it may be 2006, whatever, the president's nostalgia for the 1950s. What is your measurement, your gauge of how we all get back to what we knew once there's a vaccine?
You know, one of the definitions of a depression as opposed to a recession is not just that it's larger in scale, but also the impacts are permanent. It changes the way you go about your life. And I have no doubt that we'll be able to stop social distancing over the course of the next 1 to 2 years. I have no doubt that we will create a new equilibrium that feels like normal society, but it's going to be different. I mean, a lot of companies that are gone are going to be gone forever. A lot of jobs that are gone are going to be gone forever. The way that society works, the nature of the social contract will change, and will have changed because of the implications of this coronavirus. So I wouldn't try to think about when life returns to normal. I would rather think about when we're able to finally have some certainty about what the new normal is going to look like. People don't like the fact that they don't know what their next 3-6 months are going to be like. Are they going to be able to get their kids in school? What's that going to feel like? When can they, how many restaurants can they go to? What are their sports franchises going to look like? People hate that kind of uncertainty. And I do think that by the time we get to next spring and the weather is getting better and the first vaccines are starting to get distributed, people will have a lot more clarity. The next 6 months, I don't think they will.
Ian Bremmer, thank you so much. Congratulations. They've been doing this for a number of years, but the French giant AXA with Eurasia Group, without question, their most important report in the heart of this pandemic, where a huge amount of it is on the social conditions and the mental health we're all struggling with through this pandemic. Coming up on Balance of Power, the Speaker of the House, no doubt, first question on stimulus, Pelosi. With David Weston in the 12 noon hour. Futures advance up 29. Stay with us. Pound sterling 128.42. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en
en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Defying this retail downturn?
The function of luxury, I think, since the very beginning is the same, is to give pleasure to people. And probably in this period of time, people need pleasure more than ever.
Surveillance. Good morning, everyone. Let's do a quick data check here. Lots of going on. Equities up here as we await 8:30 jobs report. Futures up 29. That off stimulus hopes. No end or buts about that in the conversation of the day. The Speaker of the House of Representatives, Nancy Pelosi, with David Weston in the 12 o'clock hour. The dollar weaker, 93.77 on DXY. Francine, I don't American oil under $40 a barrel still.
Yeah, that's actually a move that we need to look out for. Just a reminder for everyone also, the Tokyo Stock Exchange halted trading for the entire day, Tom, so we'll see what happens tomorrow. But the pound is sliding after a report that the UK and the EU remain far apart in Brexit negotiations. And we also have that legal challenge that the Commission President was talking about. Dollar weakening and then yields on the 10-year treasuries actually rising. I put the Italian 10-year yield just for good measure. Now, coming up in Bloomberg Markets, a conversation with Brian Moynihan, Bank of America Chief Executive Officer. He'll be in conversation with our David Weston. That's at 3 p.m. New York time. That's 8 p.m. in London. And this is Bloomberg.
COVID-19 has disrupted a generation of workers, hitting younger people the hardest, and the interruption will take a financial toll.
I think there's already some damage to young people that's going to take them a decade to reverse.
There's a real threat to what's going to happen to these folks throughout their career.
I'm Lisa Abramowitz. Join me for Generation Interrupted, a special report this weekend on Bloomberg Television.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg First Word News. The presidential debate format will change in the wake of Tuesday's chaotic showdown. The commission that runs the debates won't say what changes will be made, but it said it wants to ensure a more orderly discussion of the issues. Joe Biden says candidates should be allowed to speak uninterrupted. The Trump campaign says the changes are, quote, moving the goalposts. The next presidential debate is October 15th. American and United Airlines will start laying off thousands of workers the next few days as scheduled. Both promised to reverse the furloughs if the government agrees to provide additional payroll aid in the next few days. American plans to lay off 19,000 workers. United will cut about 13,000. In the UK, a major study shows that restrictions on social contact may be helping slow the spread of the coronavirus. Researchers from Imperial College London and Ipsos Mori tested more than 80,000 volunteers last month. The results show the virus is still spreading, but not as quickly as it had been in August. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. This happens, and it is about computers and technology. There is a romance about the paper on the floor, even the spittoons of long ago. I remember them actually with my grandfather dragging me into various financial houses. In the modern day, the computers break, and then they break with a vengeance, as they did in Japan through their Thursday as well. The Tokyo Stock Exchange, they confirm they will resume trading Friday, maybe with a less confidence or certitude than they had on Wednesday. We will see on that. Right now, with confidence and certitude, Gina Martin Adams has been absolutely phenomenal about staying invested. She's with Bloomberg Intelligence and is great as our chief equity strategist. You know, Gina, I'm sorry, it's over. Down 10%. The world's coming to an end, and the SPX with a nice rebound here, now down 6% off of highs. Was the bull market broken?
You know, I think if you look at the longer-term trend, it's hard to say that the bull market was broken. Even the downdraft in early 2020 only took us back to our long-term trend lines. So it's really difficult to say that the trend was broken by a 10% correction, especially considering how concentrated the correction was. If you really dissect the move, it was almost entirely tech stocks. You did get a little bit of a sell-off in most of the rest of the index, but the vast majority of the correction was simply from overbought conditions, specifically in tech and tech-like names in the S&P 500, which just simply got a little too overinflated. As of last week, they were finally reaching, stabilization signals, and no surprise, ever since then, the market appears to have sort of bounced back a little bit, maybe entering a new sideways range until we get to the election.
Okay, here's the money question, Gina, and you see it in any given headline across the Bloomberg. In this case, Pepsi sees fiscal year core earnings 5.50 versus 5.36. That's a tea leaf to me, Gina, with their organic revenue growth, that life goes on. How do you extricate yourself from our social pandemic panic over doing business and having equities go up? How do you separate the two emotionally?
Yeah, I mean, I think you just hug the data and you hug it really tightly. I mean, the reality is that stocks are moved not just by fundamental economic conditions, but also by monetary and fiscal policy conditions. That's what really drove the first 6 months rally of the equity market. We did see the Fed swoop in. We saw the fiscal policymakers swoop in to a greater extent than any of us alive today can remember, and that created a massive reinflation in equities that was certainly worth playing. Now the question is, how right-sized are expectations for growth? Because we have repriced based upon those policy dynamics. Unless we get another fiscal policy package, which certainly is a possibility, more than likely the equity market is going to trade on fundamental improvement from here on in. I think that's part of the reason why we did see the stall in late August, early September, and why we've struggled to sort of move up in a strong trajectory, is because we are going to grapple with the reality of the economy here. However, we had reset expectations so low with the coronavirus shutdown that we're still experiencing this upward revision momentum in company estimates. And that's what you saw from Pepsi. That's what we saw en masse in the second quarter earnings season, where more companies beat expectations than at any point in history. I think in the third quarter, once again, expectations are very, very low. The anticipation is that we're going to see a double-digit drop in earnings growth again. We're going to see a high single-digit drop in revenue growth. And frankly, the top 500 companies in the United States are doing a little better than that. There is a little bit of economic improvement that they can leverage. They've managed to cut costs to the extent that they can see that improvement in earnings growth to an even greater degree than most analysts were anticipating. So I think that we are going to experience a pretty reasonable earnings season starting in about mid-October that should allow for some optimism to be embedded in equity prices.
Gina, where do you find the most value amongst technology stocks? Is there a part of the market that has been unloved?
That's a good question. Within the technology space, I'd say the part of the market that's least loved is the part of the market that's most levered to economic conditions. So it's the cyclical components of technology, like the hardware and equipment names, to a lesser extent the semiconductors groups. Intriguingly, this is the component that is also most levered to growth prospects in China, certainly has greater risk than the safer security of software and services, but the multiples are also extremely low relative to the rest of tech.
Gina, you're the adult in the room. With Bloomberg Intelligence, you have to be, measured and do research-based work and not so much buy, hold, sell. Moments ago, Benjamin Laidler at Tower Hudson doesn't mince words. He looks ahead to a melt-up Q4. What's the positioning right now? Is the gloom out there tangible so Ben Laidler gets his melt-up?
Oh, I think it is very tangible. As a matter of fact, the volatility is probably the greatest evidence of how nervous investors are with respect to the election. If you look at the volatility contracts, it's extremely expensive to hedge for volatility, and investors are anticipating volatility to continue to accelerate all the way through November and remain unusually high even into early December. So there is some anticipation of a lot of volatility in the equity market ensuing with the election and continuing through the weeks after the election, as we presumably may not have an easy transition of power or a very clear results. Whatever the case may be, investors are very concerned. I think you see this to a degree in the equity market as well. I mean, we've focused a lot on technology stocks getting reinflated and sort of driving the rally, and our contention is the reason technology stocks, in particular the safety version of technology stocks like the software and services companies, have done so well is because they're a safe play. It's a reflection of investor anxiety over economic conditions and a search for overall safety. So as that trade continues to unwind, what you want to watch for to suggest that maybe optimism is returning is some improvement in the heavy cyclical sectors. The more value-oriented spaces in the S&P 500 should rally if we really are getting overly optimistic.
Gina Martin Adams with an update there as well. And I should point out Pepsi-Cola up, I believe it was 2% earlier, off their optimism on organic revenue growth. Futures up 28, Dow futures up 201. The VIX comes in under 26, 25.90 on the VIX. We have tried to be debate-free today. Well, we fail. Coming up next, the gentleman from Virginia, Don Beyer, on his party and the other party. This is Bloomberg. Good morning.
sometimes you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I thought the debate last night was great. We've gotten tremendous reviews on it. We're hitting what people want, law and order, which Biden was unable to even talk about because it'd lose the radical left, his radical left followers. I don't think there's too many of them left. But I thought it was a great evening. It was an exciting evening. I see the ratings were very high.
The President of the United States conducting himself the way he did, I think it was just a national embarrassment.
Good morning, everyone. Bloomberg Surveillance from New York and London. Francine Lacroix and I have enjoyed being debate-free, for the most part, through the morning hours. We now go down in flames with that, with one of the most interesting Congress people in Washington. He represents the 8th District from Virginia. The Democrat, Don Beyer, joins us. This is a guy out of Williams. He did Outward Bound at Dartmouth back when that was the coolest thing on the planet, and has turned it into a storied academic, diplomatic, and business career as well. Don Beyer, should there be a second debate?
Oh, only if the moderator can turn off the mics. That was like a food fight, Tom. It was really embarrassing. My 25-year-old and my wife and I kept going back and forth to the bar trying to get through the thing.
Well, there's no question. I put out on Twitter David Brooks's photograph of watching it on his laptop with 3 fingers of scotch next to the laptop as well. Don, you know, the jokes are there, but this is not funny. As I mentioned earlier, Jennifer Rubin with a delicate essay on the instabilities of our President of the United States. How does your candidate adapt his message after what we observed from the president?
You know, the president seemed like a raving lunatic. And happily, Joe Biden came across as very competent and capable despite his 77-year age. I think he needs to stick with his message that this is a fight for the soul of America, and to continue to present a positive vision of what he can do to bring the country back together, to heal the divisions, and to lead us forward. And mostly to come back to just some kind of sanity that we can all just appreciate.
But, Congressman, good morning from London. So many people in the U.S. have already voted. So many people have already made up their mind. You know, how are these debates actually useful?
Francina, I'm not sure. You know, they always say debates don't make any difference unless they do. For those 5 or 7% that are undecided, and the election could well hinge on those 5 or 7%, I think it's important for them. And it's hard to imagine. You know, they always say that the high information people like us, we made up our minds a long time ago. The low information people make up their minds Sunday night before the election. So we have to continue to campaign right through the tape and carry that Biden message.
Yeah, Congressman, what is the demographic that you think Joe Biden should focus on right now?
Interestingly, my greatest worry are Latinos, you know, the Latinx men and women of the country. Trump apparently did very well in that group. You know, the CNN poll had it 60 Biden, 28% Trump, but Univision had it opposite with, especially with Latino men. They should be Democrats based on everything that Trump has done, but maybe they're not. And so I think Joe really needs to double down on those folks.
Don Beyer, you were August 22 or 23, just out of Williams Economics during Watergate. I talked to Bob Woodward about it the other day. At that time, the Republican Party was dead. People are talking now of the death of your opposing party. That's not good. How do you perceive that the Republicans of the 8th District in Virginia regroup now or 4 years on?
Tom, I agree with you that it's not good. We need a healthy two-party system. And the tragedy is that so many of the things that, if I'd written an essay at age 22 about what the Republican Party supposedly meant, you know, the party of thriving business and fiscal conservatism and careful work overseas and, you know, principle and honesty, and all that's gone. As Stuart Stevens has written, is down to just racism right now. So I'm hoping that there will be, you know, the Mitt Romneys and, you know, the sad part is that so many of the moderate Republicans that I really admired in Congress have left the last 4 years because of Donald Trump. But the ones that are there are the ones that will come back to rebuild the party around.
Congressman, who will female voters vote for November 3rd?
I think overwhelmingly they will vote for Joe for a variety of reasons, including the fact that, as my wife pointed out really, really nicely the other night, women have so much trouble being listened to in the first place. You know, they feel that men just brush off their opinions and their ideas. And you had Trump the other night unwilling to listen to anybody, including the moderator. So Joe Biden's a good listener, and I think most women will appreciate that. He also,
thank you so much for joining
obviously,
us.
a very good husband and a very good father.
All right, thank you so much for joining us. U.S. Representative of Virginia's 8th District, Don Beyer, joining us this morning. Now, today also marks the launch of Bloomberg Wealth, our new vertical focused on personal finance. The revamped site will feature 6 pillars: investing, living, reinvention, savings and retirement, taxes, and opinion. You can check it out at Bloomberg.com, #wealth. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Goldman Sachs is resuming job cuts it had halted because of the coronavirus. Bloomberg's learned the firm is starting off on a plan to eliminate about 1% of its workforce. That's roughly 400 positions. The move comes even though Goldman's core trading and deal-making businesses are booming. The U.S. government has extended a ban on cruises by a month till October 31st. The CDC says further action is needed before cruises can safely continue. An industry health panel has submitted recommendations it hopes will clear the way. Amongst them, coronavirus tests for all guests and crew members. And billionaire investor David Tepper has returned to New Jersey. It's a move that may cost him $120 million in state income tax this year. Tepper moved back to New Jersey in January for family reasons. It's one of the highest taxing states in the country. His move comes as other wealthy people say they're moving to Florida and Texas, which have no state income taxes. And that's the latest Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Jason Farley. He's Johns Hopkins nursing professor. Jason, first of all, good morning to you. We seem to be quite close to a vaccine, and you're also taking part in a trial. Any concerns?
Well, yeah. Well, good morning. I've decided to personally participate in the vaccine study because I think that, we all talk and we all really want to get back to normal as quickly as possible. And in order to do that, we have to stand up and participate, all of us, as many as we can, as quickly as we can, in the various vaccine trials. And my vaccine trial is currently on pause. I'm planning to enroll and signed up for the AstraZeneca vaccine. It was the one most convenient to me, being offered by colleagues at Johns Hopkins. So it really didn't have to do with any specific safety profile in my mind. It was more about the convenience of access. But yeah, I, like everyone else, want to get back to normal, and so I raised my hand to participate. Plus, as a researcher, it's my ethical obligation to also participate if I'm enrolling patients in trials.
Jason, how far away are we from a viable vaccine that is also distributed to enough people in the world?
Oh, goodness, that's a $10 billion question. I think that we are, many people enrolled in the trials around the world are still waiting on a second dose, right? They're enrolled, and most of the vaccines have at least 2 doses. And then we need time to follow them after that second dose. You get your biggest boost of immune response after dose 2. And then you need potential time for exposure. And so depending where the vaccine is around the world, some are a little bit ahead of others, we just need additional time. So in the United States, for example, we are talking about not having really strong evidence. We're talking at least 90 days, preferably 6 months to a year afterwards. But those vaccines are likely not even enrolling their second doses most of the time until October into November. And so if you say at its absolute warp speed, you're really talking about the beginning of 2021 before we have at least 90 days of data from those people.
Jason, how critical is it that we understand as soon as possible, some of the effects of COVID-19 on the underserved and vulnerable populations?
Well, I think we clearly have shown that across the country that all vulnerable groups, whether it's from overcrowding or poverty, have increased risk of the infection itself. Right? So that's the first thing, the epidemiology. And then the clinical consequences of the infection. So vulnerable populations, any population experiencing lots of poverty, poor access to care, have more underlying comorbidities, which we have seen to be the direct cause of the greatest amount of morbidity and mortality. And so when you see concentrations of poverty and concentrations of comorbidity in populations, you see greater amounts of disease.
Jason, what is the one thing that you'd want to know about COVID-19 right now? Is it, why some people have it worse than others? Is it the long haulers? Is it something else that we're forgetting?
Yeah, I think that it's still unlocking the mysteries of the cytokine storm in many patients, trying to understand why, some very healthy people go on to progress and ultimately to require hospitalization, ICU admission, and then ultimately ventilation and death is still a mystery. We know some of the mechanics, but we don't know why some people versus other people. We also still, the long-term sequelae of infection, inflamed hearts, cardiomyopathy, neurologic complications that are persistent in some people but not in others are still a mystery. And then finally, we don't know if the vaccine will respond in the same way in all populations. And so that's why it's really critical. For example, most of the vaccine trials right now are only enrolling those 18 years and older. And so we've got to get more data on pediatric and adolescent vaccine use.
Jason, thank you so much. Jason Farley there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can, of course, tune in every day for exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, there's quite a lot going on in the markets. I know I'm looking at pound weakness. Tom and I were speaking about it quite extensively. This is on the back of a couple of headlines that we had from the European Union and from the Commission President. Overall, U.S. futures are actually gaining. European stocks also on the up. There are signs that there's a bit of progress in Washington towards a fresh fiscal stimulus package. European stocks are also climbing because we had some better than expected retail figures. H&M, we spoke to the chief financial officer. It's up after pre-tax profit beat even the highest broker estimate. Coming up next, more Bloomberg surveillance with Jonathan Farrow, Tom Keene, and Lisa Abramovitz. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a new economic cycle. It's a new bull market. So ultimately, this will be a dip to buy.
This is a bull market that's under some pressure.
Investors who are expressing their views are starting to show more bearish sentiment.
Rates may never rise. That's entirely possible.
Inflation's not the problem to worry about at the moment. It ultimately comes down to, do you have money or not? And if you have money, you can grow the economy and the households.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, with equity futures higher by 29 points on the S&P 500. Tom Keene, goodbye Q3. Hello, Q4.
Hello, Q4. Rain, torrential rain that we saw, John, the last couple of days, and sunny spells right now across New York and across this equity market. John, people are resizing here. Ben Laidler, who's been so good at calling turns, his note this morning, he just calls it a Q4 melt-up to come.
Laidler of Tower Hudson pointing out that the well-priced U.S. election volatility could fade, the economic data might continue to improve. Okay, and the market might grind higher, but Tom, the numbers we're seeing from some of the big employers around the world are not pretty. They're not good.
I'm so glad you bring this up. I thought Olivia Rethcote and Scott Lamon killed it with their story last night. John, it's horrific, but once again, you separate stock market activity from the social cost we're seeing right now.
90 minutes away from claims data, Lisa.
Yeah, we'll be finding out a backward look at the latest claims. I say backward look, even though it's a weekly initial claims figure, because we are getting all of these announcements. Also, we'll be getting a backward look at the amount of income people received in the month of August. Also today, one thing that I'm going to be watching is the copious amounts of additional Fed speak. The Fed's John Williams and Michelle Bowman speaking. I want to know how much stress they're seeing within the banking sector in specific. And then the theater in Washington, D.C. continues. Stephen Mnuchin, Nancy Pelosi continuing to talk. The key question, is this just theater, John, or is this real?
It is fiscal headline roulette in financial markets. Let me tell you that. As we try and get you prepared for the opening bell, we'll do our best. Equity futures are firmer on the S&P 500. We drift higher by almost 0.8% on the S&P right now, up around about 29 points. That's the equity market action. In the bond market, we actually had a move in yesterday's session on a 10-year Treasury, Tom, of 3 or 4 basis points as we continue to get this happy talk down in D.C. And, Tom, just to point one thing out, because Lisa's right, is it just happy talk, posturing ahead of the election, or are these guys really looking to close the gap?
Well, the bond market speaking, 140, 141 on a 30-year bond out to a 147 right now. John, I heard the real yield got renewed for a third season just off the bond move yesterday. But, you know, you look at the bond move, and I'm still looking at the real yield, negative 0.94%. I mean, it's a very, very dynamic, John. And I'm going to suggest this jobs report tomorrow and claims today set us up for a reaffirmation of that dynamic if they're benevolent, if they're benign reports.
Still slap bang in the middle of that range, between 50 to 90 basis points, right there on 70.
Yeah,
still
fair.
in and around it this morning. Joining us now is Phil Camporelli, Managing Director of Multi-Asset Solutions for JP Morgan Asset Management. Phil, great to catch up with you, sir. Help our audience navigate the tape bombs down in D.C. right now. It's headline after headline around fiscal talks. How do you process those headlines, Phil?
Yeah, I think the last 24 hours of price action, Jonathan, are extremely telling. The gloominess from September, the really bad seasonals from September were all changed on a dime because of the realization that we believe the fiscal plan may get delayed, but this is happening, Jonathan. This is happening, along with some pretty incredible data. Chicago PMI, best since December of 2018. ADP payroll report, better than expected, setting us up for a really nice payroll report coming on Friday. Jonathan, there is no denying that we are in a new cycle, and that is the signal. It is not the noise coming from Washington, John.
Phil Kemper, how do you separate the noise, as you call it, from equity market performance? I mean, it's a task that everybody has to do every day. I would suggest harder now. How do you make that separation?
Well, Tom, it's a really nice spot to be a multi-asset investor right now. I think that's the key. So there's two sides to the multi-asset portfolio, right? The 60 and the 40. On the 60 side, which is the equity side, what we're doing is we're diversifying our overweights. This is not just a U.S. exceptionalist story anymore. We believe this is a new global cycle. The world will emerge from the pandemic in 2021, which is critically important. However, you can't be blind to the noise that we're seeing from the election and from fiscal. So on the 40 side, it's a credit story, Tom. 10-year Treasury notes are not moving. 10-year Treasury notes are not really going to protect the equity allocation. We believe credit is a great place to be, both from the investment grade side, the securitized side, which is non-corporate credit, and high yield. Those three things make up 75% of our fixed income. If you think about what the aggregate is, Tom, that's 85% government bonds. So we are making a big bet on credit because government bonds aren't moving, Tom.
All right, Phil, this is the consensus that we're entering a new bull market. How consistent is the incredible buildup in corporate and government debt with the beginning of a bull market?
Yeah, that's a good question. So the one thing that we keep a real close eye on is that how much leverage is building up. But this kind of all goes back to the straw that stirs the drink, which is interest rates. If affordability and debt affordability, specifically, whether you're a homeowner or you're a corporation, stays at these levels, then the Grandmaster Jerome Powell is doing his job. The transmission mechanism is working. And we don't believe that that's bad debt if it's affordable debt. And I think that's a really important key going forward here. The 10-year Treasury note is a big driver of our portfolio construction, whether it be value stocks, whether it be credit, and of course, government bond duration. So that's how we're kind of incorporating your question into kind of, is it a good signal or a bad signal? Is it affordable? And we believe it is.
Grandmaster Powell, your words, not mine, Phil, but I will use them. Grandmaster Powell, in your words, doing his job. The job hasn't been done down in D.C. It got done back in spring and helped to offset what could have been an income crisis in this country. Now we face more layoffs. You see the headline every day. Every 24 hours, there's another big one. Goldman resuming job losses as well. The social stigma, the PR story, is not the same. It's changed. These companies feel like they need to change how big they are. And the answer's small and smaller if you're not Amazon. Phil, I just wonder from your perspective, how do you process that at the moment?
Yeah, those are tough headlines for sure, John, and certainly emotional to say the least. I will say, though, that no one knows what a recovery from a forced recession. Jonathan, we've never seen this. Tom's never seen this. Lisa's never seen this. Our colleagues have never seen this. We had a 30+% contraction in the second quarter, followed by a 30+% increase in the third quarter in GDP. No one's ever seen this. So while those headlines are today's headlines, it is impossible for us to judge. I made that joke about Grandmaster Powell. Even he got this wrong, right? He missed the GDP forecast for 2020 by 3%, and the unemployment rate forecast by 2%. It's impossible to just incorporate these headlines into what we're going to see going forward.
Where is your allocation of new assets right now? I mean, I've got Ben Laidler, who's been shockingly prescient about when markets move, very optimistic. You know all the gloom crew that's out there. Where's your marginal allocation right now?
So the answer right now is credit, Tom. It's not quite equities, because of the noise around the uncertainty in the election. However, we've seen this. October is the second best month seasonally of the year, dating back to 1995. November is the best month. We're heading into a very, very positive cyclical S&P 500 return seasonal story. But Tom, to answer your question directly, the marginal dollar has to be in credit. That allows us staying power, to stay in the market without having to be in those incredibly punitive rates in cash rates and government bond rates, Tom.
How risky are you willing to go, Phil, in credit?
So this is a story that we have about 10% of our 60-40 allocation allocated to high yield. And people think that that's risky. However, at the end of the day, if you pick your credits right, and if you go up in quality, to answer your question, Lisa, we don't want to be torpedoed by a bad high yield name in a multi-asset fund. We are not a high yield fund. We're a multi-asset fund. We're looking for high yield for the carry. And that's what we're able to get in higher quality high yield. So not let's go jump into energy stocks. Let's go jump into triple Cs. That's not what we're trying to do, Lisa. We're just trying to get some carry from high yield, which we think, like it did in September, can go down less than the equity market if we see some volatility coming ahead.
I just hear double Bs, Phil. Is that right? Everyone keeps telling me that's the sweet spot. Is that the sweet spot?
Yeah, and possibilities for upgrades. You know, at this point in the cycle, John, you can go this crossover trade. Finding the stocks, or I'm sorry, the credits that can be upgraded into investment grade, that is something that we think, you know, we can do, and that's something that a lot of investors should be interested in as we push forward through the election into the beginning of 2021, when this cycle that we believe has resiliency and staying power, irrespective of when the fiscal headlines resolve themselves, you know, that could be a pretty impressive return for us within fixed income.
Hey, Phil, great to catch up. Send our best to the team, won't you? Phil Camperell there of JP Morgan Asset Management. Tom Keene, you and I keep reflecting on this. The conversations we have with economists right now, very different to the conversations we're having with market participants. And hasn't that been the truth for the last 6 months?
Well, the truth the last 6 months, I'm glad you bring up the timeline, John. We're going into fourth quarter right now, and the starkness here on October 1 is just stunning. I mean, I mentioned Ben Laidler 3 times. There's like 10 Ben Laidlers out there looking at 27,888 on Dow, SPX 3380, and the VIX under a 26 going, where are we going to be in 90 days? And there's that nudge to where it just gets better.
I'm still in March, dazed and confused, with people telling me things will reopen in April, then May, then June. Tom, where did this year go?
Well, that's true. The year has been hugely traumatic. Ian Bremmer on with us in the last hour with the AXA report. And John, they spend a lot of time in that report on the mental condition of people, just the exhaustion from a global pandemic. I mean, I know you see it in England as we see it here in America. Maybe we witnessed it in that debate. But, you know, we're staggering into Q4. And yet I would suggest, as Gina Martin-Adams mentions, the market is separate from the economics and from some of the social discussions out there.
I would suggest that maybe you shouldn't write a year ahead outlook piece for 2021 yet.
Well, I like
you know how they're usually written October time, Tom, and published late November into December. I don't think this year's the year to do that.
Yeah, well, you see that in the budgets, too. How does a corporation plan for Q2, Q3 next year?
Coming up, how do the states plan? New Jersey Governor Phil Murphy, he'll be joining us in the next hour. A conversation you don't want to miss right here on Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump signed stopgap legislation that will avert a government shutdown. It will keep the government operating at current spending levels through December the 11th. The country's spending authority expired at midnight. Neither Democrats nor Republicans wanted a shutdown weeks before the election. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin say they've made progress on a compromise stimulus bill. They plan to continue negotiations. Mnuchin tells Fox he sees an agreement costing as much as $2.2 trillion. The Federal Reserve has extended its unprecedented limits on Wall Street bank dividend payments and buybacks. Those caps now won't be lifted till the end of the year. The Fed blamed economic uncertainty from the coronavirus pandemic. Plus, it says the banks need to preserve capital. JP Morgan had already indicated it wanted to resume share buybacks. And the president of the Tokyo Stock Exchange apologized after the worst outage in its history. Trading was halted for the entire day after a hardware breakdown.
I'm very sorry that our notification of the system failure came rather late this morning. We prioritized spending time to find out the reason for the issues that led to the delay in information release. We are very sorry for this.
The Tokyo Exchange says it will resume trading on Friday. And the European Union has started legal action against the UK over Brexit. Bloomberg's learned the EU will send a letter accusing the UK of breaching the terms of agreement and breaking international law. It's the first step in a process that could end up in a lawsuit at the European Court of Justice. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Most likely, we're not going to know who's the winner. It's going to be contested for weeks, if not for months. You could have a 10% correction just because of that. If you have a very severe, protracted, highly contested situation.
Maria Rabini there, NYU Stern School of Business professor, also known as Dr. Doom, or Professor Doom, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Front page of the Daily Mail here in the United Kingdom this morning. Mr. Boom versus Mr. Doom. On the one side, the Prime Minister Boris Johnson. On the other side is the chief economist over at the Bank of England on Threadneedle Street, Andy Haldane, who had a speech out yesterday, Tom, titled Avoiding Economic Anxiety. And there was an interesting quote that many people are reflecting on. Here's just a part of it.
Please.
Averting an economic anxiety attack calls for a balanced and flexible approach to the words and actions of businesses and policymakers. Encouraging news about the present needs not be drowned out by fears for the future. Now, I think I know what he's saying. I'm not saying this is what he's saying, but I think, Tom, there is a suggestion there that even if you are anxious about the future as a policymaker, you should focus on the good things happening now. And perhaps that will instill a little bit more confidence in society. I don't know if that's the best approach, but Andy Haldane made the case in the last 24 hours.
Well, the working presence here is that you worry about the present tense, and of course over the last 10 or 15 years, just under the general phrase, John, forward guidance has been the vogue. Do you think, John, we've worn out the crystal ball at the central banks?
I think it's fair to say we've worn out some of the forward guidance, particularly right now, Tom. And I would just reflect on that just for a moment. I think central banks, including the Fed and the ECB, are wrapped up in the future 5 years down the road, trying to tell this market and people that they won't be hiking rates. They'll tolerate higher inflation. When people are focused on the here and now, and they want to know what they will do if things get worse and how they'll continue to support this economy over the next few months, not the next 5 years.
Well, and Kevin Cirilli's timeline, John, as you know, is to get to the here and now of, let's say, Thursday afternoon, as Speaker Pelosi speaks to David Weston at 12 noon today. Our chief Washington correspondent back in Washington after a small moment in Cleveland over the last few days. Kevin Cirilli, Greg Valliere this morning makes his prediction. Biden will win narrowly. And then he's got a big probably for the U.S. Senate. What are Republican senators and Republican members of the House and the Republican broader community saying to the president on this Thursday?
Well, Senator Tim Scott, Republican from South Carolina, said yesterday that he thinks the president needs to clarify his remarks with regards to race that were made during the first presidential debate. Look, I think that the races in terms of the battleground states, if you look at Iowa, if you look at Kentucky, for example, South Carolina, where Lindsey Graham's in a tough battle, you know, I actually think that those Republicans are actually in a better position more so than the president, should the president not be on the ballot. What's interesting here, though, and this is what Republicans and Democratic strategists don't know based upon the conversations I have with them, is how President Trump at the top of the ticket and Joe Biden at the top of the ticket will impact the down ballot races, and whether or not you've got Democrats in some of these states who are just going to check off all the Democrats on whatever side of the ballot they're on.
The money coming in for the vice president, does President Trump have the resources to campaign? Forget about November. Does he have the resources to campaign to October 15th?
He has the resources to campaign. I mean, he's got a lot of money at his disposal, but they have shifted some money around from battleground states, which has raised some questions just in terms about their strategy. You know, look, the debate commission is now evaluating sort of the procedures for the next presidential debate, which is in about a week and a half in Miami. So it's a town hall format. It will be fascinating to see whether or not there's a change in the sense of the next debate. And we should note that TV viewership for the first presidential debate was significantly lower than previous cycles.
Kevin, do we know what those changes are? I mean, is it going to be muting mics?
That's what they're talking about, but Lisa, I don't know how a muted mic would impact the flow. I think just given that it's a town hall and because people will be asking the questions as opposed to a moderator, but voters is the better word choice. Voters will be asking the questions. It lends itself to a more contained question and answer moment, and so hopefully that would move things along.
Well, Kevin, did anyone come out of that debate thinking that it benefited them to act that way? And if they did come out of that debate thinking it didn't benefit them, why don't they just change their approach in the next debate anyway?
Well, precisely. And I spoke with sources on both campaigns yesterday. I think the Democrats felt that Biden felt emboldened after that debate. And the source that I spoke with on the president's reelection campaign, Jonathan, said to me that they did not think that strategy helped them at all.
Oh, I'm sorry, I was muted there. That's Pharaoh muting me, Kevin. He's got a mute button in London.
I've actually got it on my phone now, Tom. And I'd love to use it.
Thank you, John, for letting me speak.
Just turn the volume up and down.
That's very...
Anytime.
I'm sorry, Kevin. That's again. How's Biden doing? I mean, he's on the train yesterday. He's got the hat on. He's raising money. I'm not going to get muted here. How does the vice president doing? I mean, the perception is it was a success. Does he feel that?
I think there's an uneasiness. I think that just everyone experienced 2016, and so that's why I think when I talk to Republicans and Democrats, there's this uneasiness and there's this expectation that the election is on November 3rd, but that there's going to be political events after that, whatever those events are. Whether it's even in the local press reports in Cleveland, I mean the local municipalities out in Ohio are talking about whether Mark Zuckerberg should be funding poll workers at a polling station, and the whole entire dynamic there about whether to accept money from Facebook. And so all of these patchwork and microcosms of polling stations and whatnot, all of that is contributing to the pandemic, is contributing to this sense of uneasiness about an election night in America. And should we start calling it election month in America?
Or election months, which is something people on Wall Street are worried about. Kevin, before you go, really important, just quickly, my characterization of things, not everyone's, but the standoff that appears to be taking place between the airlines and Secretary Mnuchin right now. What's the latest reporting on that?
Well, with regards to the airlines, there is bipartisan consensus that they need some additional funds, but there is not the vehicle for them to do it. Secretary Mnuchin, Speaker Pelosi continue to say that they're having ongoing negotiations, but at this point, those businesses are now forced to make tough decisions as a result of a lack of, as a result of inaction in this town where I am.
Kevin, great to catch you up, sir. Kevin Cerulli there, Bloomberg chief, Washington correspondent. 1 hour, 5 minutes away from initial jobless claims in America. Jobs, jobs, jobs. It's got to be the focus, Tom, as we go into the weekend.
There's no question about that. I really think the jobs report has been undersold. Bloomberg with that great story out yesterday on the percent of unemployed, not so much the numbers as well. John, I'm totally confused, and please don't mute me here. I mean, Arsenal's playing Liverpool, but it's not Premier League. How is that possible?
There are cup games as well, Tom, not just the league matches.
Yeah, but when the Red Sox play the Red Sox play the Yankees, it's like
I don't think the 20 seconds we've got here is sufficient enough. And I love this little volume button I've got on you. It's just beautiful. From New York and London, this is Bloomberg Surveillance, live with Tom, nicely muted. How we want to keep him for the next hour.
defying this retail downturn?
The function of luxury, I think, since the very beginning is the same, is to give pleasure to people. And probably in this period of time, people need pleasure more than ever.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
From New York and London, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. 1 hour away from economic data in America, claims very much in focus, all about jobs going into payrolls Friday. 2 hours away from the opening bell, equity futures up 31. We advanced 0.9%. Goodbye Q3, hello Q4. Q3, we advanced 8.5%. September, though, was not great. In foreign exchange, euro dollar 117.55, firmer euro in the mix, and there we are. There we are at 0.7% on a US 10-year. We have a move. Though I should emphasize, I should stress and highlight that at 70 basis points, we are still slap bang in the middle of the range. The low end of 50 basis points, the top end of 90. April through to now. That is your range, and that is the midpoint, Tom.
And, John, the conversation of the day, David Weston with Speaker Pelosi here in the 12 noon hour, and you really wonder, can they get closer to a stimulus? And what will be the market reaction to John's point, folks, as we see any disappointment from the speaker? Well, John, I look at the markets here, and I just love the idea of Gina Martin-Adams that you've got to participate to play. You have to participate to win. You mentioned this earlier. Where were we all in February and March to get on board equities looking out 6 months or a year?
Worried about the future. It's just human nature, Tom. You worry about threats around you, not just in markets, just in general. As human beings, that's what you do. You're gripped by them, always worried by them, and about the future. And I think the secret, of course, over the last 10, 15 years has been to try and focus on the upside risk as well. And to be clear, this economy in America has recovered quite nicely in a way that some people didn't anticipate.
Yeah.
The momentum followed through deeper and deeper into summer. The question still remains as to whether we can do that into year end. And I think the job cuts that we're starting to see now are a different phase. We've had a different phase, and we've got to be clear about that. Companies in the depths of that pandemic wanted one thing: liquidity, access to cash. Later on, you have a look around and work out how big you want to be. And the answer right now is smaller for many companies. And we're starting to see those headlines cross the screen.
Standard & Poor's 500 down about 6% from the peak here off that correction stage of a number of difficult days ago. Lisa Bramlett, what did bonds do in the third quarter? How are they positioned? Not full faith and credit, which John and I focus on, but IG, you mentioned triple B earlier. That stuff. How'd they do?
They went gangbusters. They had an incredible 3 months. And this is the flood of cash into credit, right? And again, though, Tom, and going back to something that John said, people worry about the future. It's sort of the opposite now. People worry, but they put those worries aside because they have faith that policymakers will rescue them, whether it's the Federal Reserve or whether it's Washington, D.C. And Tom, that to me is a little bit concerning, of course, because I'm Lisa the Bear Abramowitz.
Well, Lisa the Bear can do that, but there has to be...
I like that Lisa calls herself that now, Tom.
I mean, you got to own it. You got to own yourself.
Yeah, she nailed it.
You're owning it. I love it.
Jim O'Sullivan with his TD Securities, who has to sort all this out, and, of course, the economics into the markets as well. Jim, you know from Chapter 23 of Econ 101, the markets get out front and expect. Are the markets signaling a better economy Q1 next year, Q2 next year?
Hi, Tom. Good morning. Hi, John, everybody. Well, I would think so. I mean, it's hard to say exactly what's priced into markets, but there does seem to be a lot of optimism priced into markets. I mean, I don't think people expect to see the strength that we're seeing in the third quarter, or just saw in the third quarter, to be repeated going forward. But clearly, people are assuming that it's up and pretty solid from here. I mean, exactly how strong, but yes, I would say the risk is that people probably are a little ahead of themselves from that perspective.
The recovery in the vector is the idea of getting back to the trend line that we were on in January or February of this troubled year. How long does it take us to get back to a constructive trend line? Is it quarters or is it years?
Well, I mean, we would say years. I mean, certainly in terms of just getting back to the level of GDP that we were at the end of 2019, I mean, I think that, that could well happen during 2022. But of course, in the meantime, if trend growth is 1.5 to 2% per year, I mean, you're certainly talking much later than that. I mean, I think the way to think about it is more the unemployment rate. If we were at 3.5% back in February, how long before we see something close to 4% again? And obviously the Fed's projections, their median projection, has them hitting that level at the end of 2023. I think that's plausible, but it's probably being optimistic, if anything. It's probably even later than that.
Well, Jim, they weren't optimistic enough going into year end. Initially, they were looking for something north of 9 on the unemployment rate. We're now in at around 8. Jim, talk to us about that. The correction down to 8, the positive move we've seen in a very short amount of time, and how much harder it will be to get from 8 to 4.
Yes, I think in general, I mean, Trump is right, I guess, to start it off in the sense that we've had a record recovery. I mean, certainly the numbers over the last 4 months or so have been stronger than we expected. I think most people expected. Payroll's up over 10 million in 4 months. Looks like third quarter GDP. I mean, we've got a 25% annual rate. If anything, the tracking numbers like Atlanta Fed are over 30% at this point. I mean, they're record numbers, no question about it. But of course, the net of it is still down pretty sharply. Employment as of now is down 11.5 million from where we were in February. And plus, as you're touching on, clearly, momentum seems to be fading. I mean, there's no question, I think, that momentum is slowing relative to the third quarter. And the question then is how much? I mean, we'll get an update on that, of course, tomorrow with the employment report. We think the risks are tilted toward a weaker number tomorrow, with the idea that momentum is clearly slowing here. And how much of that is because of fiscal stimulus fading is not clear, but we do think momentum is fading fairly significantly.
Well, Jim, that's what I wanted to touch on with you. I think a quote that stands out for everyone in the last quarter, the start of summer, Jamie Dimon, JP Morgan, said the following: "This is not a normal recession. The recessionary part of this you're going to see down the road." I assume he's alluding to the fact that even with the labor market shock, because of fiscal action, we didn't have the income shock. Jim, where are we now, just in terms of disposable income and the amount of cash in the hands of consumers, even as this fiscal package just fades into the background?
Well, there was, of course, a huge increase in income, even as employment plunged with the plunge in the economy. And I mean, even now, income, I mean, is coming off a little bit the last couple of months, and it's going to be down again in this morning's report for August, almost certainly, as unemployment benefits were clearly down on the month. But the net of it is still a boost, certainly from the various fiscal support. And I think it's because of the big surge in income that we've seen strength in consumer spending in particular. And within consumer spending, goods spending has been stronger than before the crisis. But the overall economy clearly is not anywhere near back to where it was. But at this point, it looks like income is fading. And certainly the stimulus part of that is fading. Now, that's why, I mean, these talks are going on in Congress. Do we get another round or not? Absent another round, it looks like fiscal stimulus is waning to the point where it actually turns into a drag in the fourth quarter.
How much of a drag?
Well, I mean, it's hard to quantify in terms of the exact numbers, but for what it's worth, the CBO puts out calculations based on current baseline, assuming no further legislation. They say that fiscal stimulus goes from adding 13 points to the annualized growth rate in the third quarter to subtracting 7 points in the fourth and subtracting 6 points in the first. Now, those estimates come with wide uncertainty bands, but I think the direction is pretty intuitive. Just when you look at the flow of cash outlays from the Treasury, they surged and now they're coming back down again.
Jim, how do you trade this, given the degree of uncertainty and the wide range of outcomes?
You know, I mean, I guess my focus is more the pure macro. I think in general, certainly the backdrop here is such that, I mean, the Fed is going to have to be highly accommodated for many, many years. So, I mean, I think you could trade the ups and downs in bond yields, certainly, and the news flow can go up and down. And I mean, if we're right, I think people will be disappointed by the employment report tomorrow, for example. But certainly the broad thrust of this is that interest rates are going to be low for many, many years. I mean, exactly what that means for the equity market, there's so much more that comes into it, the politics, how do people react to the election? So there's a lot there, obviously, people have to figure out.
Jim, when you look at this jobs report, and when you look in the all-in American experiment, it comes down to potential GDP. Have you lowered your potential GDP off this pandemic?
I can't say I have an official number of potential GDP, and I think to some extent it's moot in terms of the next year or 2 years. I mean, ultimately, I mean, I know the whole idea of NIRO and full employment has been de-emphasized in recent years, but I mean, I think to the extent you think full employment of the economy was something in the 4% range for the unemployment rate, I mean, we are so far from that right now that it's moot, and it's going to be several years probably before we get there. I mean, of course, over the long run, potential growth depends on productivity growth, depends on labor force growth, and both of those have slowed in recent decades. And I mean, there's nothing recently to suggest that we should be marking those numbers up again. Of course, the CBO just came out with longer term numbers, just was it last week or the week before, and they marked down their longer term projections. But I can't say I have an official number on potential growth, but when you're arguing whether it's 1.6% or 1.9%, and GDP is down as much as it is right now, I think it's moot. I mean, ultimately, it becomes a factor again in terms of what's full employment and what should the Fed be aiming for. But at this point, given where the unemployment rate is, we're clearly so far from potential that it is moot from the Fed's perspective right now.
Jim, just quickly, 24 hours and about 50 minutes away from a payrolls report in America. You kept saying that you expect a downside surprise. Let's put some muscle on those bones just quickly. Here's the estimate. 872 is the median estimate in our survey. Unemployment expected to come in and around 8.2%. Jim, historically, for our audience that aren't familiar with you, historically, you are a very, very accurate forecaster of payrolls. What are you actually looking for?
We've got 400 total payrolls. I mean, I think it will be an important detail in this report, private versus government. We've got private up 600,000 and then government taking 200,000. I mean, one issue is usually there's a surge of employment back onto government books with state and local education workers in particular in September, to the extent you get fewer than usual this year, and the seasonal factors will overcompensate for that. So, and then we'll see on the private, we've got 600,000. So they're positive numbers still, but obviously if you look at total payrolls, there were 4.8 million in June, 1.7 million in July, 1.4 million in August. So if you get something like 400,000, I think people will extrapolate and start speculating about the possibility we get a double dip in the fourth quarter.
The deceleration story. Jim, great to catch up, sir. Jim O'Sullivan, DT Securities Chief US Macro Strategist. Thank you. 872 is your median estimate. Jim O'Sullivan looking for something coming in around about half of that, Tom. And the double dip, not the first time we've heard it. We've heard it again. This time from Jim O'Sullivan from TD. The potential, the prospect of a double dip.
Double dips are frightening, like the 1980s. They don't look that big on a chart, John, but there's a duration to them where you get the exhaustion of quarters and quarters, even with a recovery between the two dips. Double dips are not so much about the size of the slowdown, John, is the length of it.
Coming up, New Jersey Governor Phil Murphy answering some of the questions on the virus, his economy, his state, and how to balance the budget. All of that coming up right here on Bloomberg Surveillance Live on Bloomberg TV and Radio.
With the First Word News, I'm Ritika Gupta. The presidential debate format will change in the wake of Tuesday's chaotic showdown. The commission that runs the debate won't say what changes will be made, but it said it wants to ensure a more orderly discussion of the issues. Joe Biden says candidates should be allowed to speak uninterrupted. The Trump campaign says the changes are, quote, moving the goalposts. The next presidential debate is October 15th. Joe Biden hammered President Trump on the economy during a train trip across the Rust Belt. Biden was speaking in 7 cities through eastern Ohio and western Pennsylvania. President Trump campaigned in Minneapolis. The president signed an executive order aimed at expanding domestic production of rare earth materials. Now, that may help with voters in Minnesota's so-called Iron Range. It also would reduce the dependence on China. And American and United Airlines will start laying off thousands of workers the next few days as scheduled. Both promised to reverse the furloughs if the government agrees to provide additional payroll aid in the next few days. American plans to lay off 19,000 workers. United will cut about 13,000. Meanwhile, Goldman Sachs is also resuming job cuts it had halted because of the coronavirus. Bloomberg's learned the firm is starting off on a plan to eliminate about 1% of its workforce. That's roughly 400 positions. The move comes even though Goldman's core trading and deal-making businesses are booming. And Rolls-Royce plans to raise up to $6.5 billion in new financing. The jet engine maker's reserves have been shrinking because of a collapse in demand for the planes it powers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
COVID-19 has disrupted a generation of workers, hitting younger people the hardest, and the interruption will take a financial toll.
I think there's already some damage to young people that's going to take them a decade to reverse.
There's a real threat to what's going to happen to these folks throughout their career.
I'm Lisa Abramowitz. Join me for Generation Interrupted, a special report this weekend on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The economy took a deep dive, as you know, and it did come back quickly when we opened things up. But naturally, you would expect to see that recovery be a little more gradual. Where I see the real challenge now is getting the last 5% of Americans back into the workforce.
The final mile is always the toughest one, it seems. Thomas Barkin there, Federal Reserve Bank of Richmond president, weighing in on the labour market. Jobless claims around about 43 minutes away. And then tomorrow morning, payrolls Friday. Here's the price action ahead of all of that. Your market open just around the corner, 1 hour and around about 40 minutes away. The story right now is euro-dollar 117.61, firmer by 1/3 of 1%, a weaker dollar. Futures positive, up 31 as we kick off Q4. We're up 0.9 of 1%. Plenty of happy talk down in D.C. about the prospect of closing that gap between Republicans and Democrats. And as that talk really starts to boil up over the last 24 hours, Treasury yields just creeping a little bit higher.
Yeah.
We had 70 basis points earlier. There it is, Tom, 0.6988%. I have to say, not just the fiscal talks, though, Tom. The data yesterday, pretty decent, too.
Pretty decent, too. PepsiCo out with better than expected organic revenue growth and a view forward as well. 30-year bond, 1.4768, rounded up 1.48%, showing a changing mood. The economic news flow is so important that we could begin a 3-hour conversation with Michael McKee, our economics and policy correspondent this morning. We're not going to do that, but we are going to go to a story that's boring and buried, but has huge symbolism. Michael McKee knows that Randall Quarles holds court at the Fed as a vice chairman of sort of the financial and the regulatory as well. And Michael McKee, Mr. Quarles and all, made an important announcement on Mr. Diamond, Mr. Moynihan, and the rest yesterday.
Yeah, this is something that certainly gets investors' attentions. Earlier this year, the Fed suspended buybacks for banks that have over $100 billion in assets and put dividends on a formula based on what their capital ratios are. They extended that. It was supposed to expire yesterday. They have now extended that through the fourth quarter because, and this gets back to what Jim O'Sullivan was talking about when you think about a weak jobs report, maybe telling people there might be a double dip ahead. the Fed's looking out and saying that is a possibility, and we want to make sure that the banks are adequately capitalized. So they voted to extend that yesterday for another quarter. The banks have already said that they're expecting huge loans. You look at JP Morgan Chase, Citigroup, and Wells Fargo alone in the second quarter set aside $28 billion in loan loss provisions.
But Mike, there's 33 banks involved here. Is Jamie Dimon having a tantrum with his team because he's rock solid and 7 other banks aren't? I mean, is it every bank equal, or are they just bundling them in all together?
Well, every bank is not equal, and the largest banks have the largest systemic risks to the economy. But in general, Fed officials say the banks are well capitalized and it shouldn't be a problem. Tom Barkin told us that yesterday in our interview with the Richmond Fed Bank president. But they want to make sure that if the skies turn cloudy and dark again, that the banking system is in good shape. And so they're going to extend this for one more quarter. It just means that the banks are probably more upset, Tom, with the fact that they can't buy back stock when it's so cheap because nobody wants to buy banks right now.
Hey, Mike, it could be worse. Governor Brainerd dissented, had done previously and said the following, that the capital distributions would, quote, create a significant risk that banks will need to raise capital or curtail credit at a challenging time. Now, Mike, what I haven't heard enough discussion on this morning is that Governor Brainerd gets a whole lot more interesting as we get closer to this election. That could be a future Treasury Secretary essentially saying she doesn't think there should be any dividends or buybacks whatsoever. Your thoughts on that this morning, Mike?
Yes, she's been very strict on this, and one of the probably the most doctrinaire of Fed officials. She's the only real Democrat on the board that's left, and she believes that the banks should retain capital because there is a danger out there, and that bank capital ratios should be higher. So it would be interesting to see if she were indeed on the short list for Treasury Secretary, and she's been mentioned, whether she would bring those arguments not just from the Fed but to the banking regulators that the Treasury Department supervises, including the controller of the currency.
Yeah, well, I will say, Mike, this will be a conversation that we have ongoing over the next 2 weeks as we have a drumbeat in a bank earnings. How much will they become utilities in some way following this recession? I do want to talk, though, about this dissonance between the bearish view based on how much money the banks are holding to cover loan losses and this Fed conservatism with the markets, with stocks that have been going gangbusters, with credit, people piling funds into that. Given what we're expected to see with the jobs report in less than 40 minutes, how much is the economy turning faster than perhaps some people are pricing in?
So far, we have seen a faster turnaround in the economy than was perhaps expected back in May and June when we were just coming out of this. Jobless claims, 850,000 is the forecast for this morning. We'll see if that's lower than, if it comes in lower than that. The issue is that because all of the CARES Act stimulus for the economy has pretty much expired now, you saw these job layoff announcements yesterday. The airlines can now lay off people starting today, that things are going to turn bad again. And people have been reluctant to invest in banks because really what they've been doing is making money on trading revenue, and that could turn south. Lending has not been really profitable except for in the mortgage area, and so there are concerns about where banks would end up if the economy got dragged down again, particularly if something went wrong in the stock market.
Mike, when we look at some of these tens of thousands of job cuts that have been announced over the past 48 hours, is this creative destruction or is this just destruction?
For the most part, it's just destruction. Creative destruction, the old theory implies that modern businesses will come along and supplant those that can no longer keep up. And the example everybody uses is the buggy whip industry when we invented automobiles. But this is just jobs lost because we shut down the economy. And that's what Tom Barkin was talking about yesterday. It's hard to bring back jobs because instead of creating new jobs to replace them in different industries, you're just eliminating the jobs.
Michael McKee, always great to get your thoughts on a show, sir. Catch up with you in around about 35 minutes' time when we get initial jobless claims in America. Tom, the data just around the corner. One thing that we keep going back to is how consumers will engage or rather disengage with some of the headlines that we're seeing at the moment, really reflecting on what Andy Haldane, the chief economist of the Bank of England, had to say just previously, earlier yesterday. And I do think that's a key question going into Q4, Tom. Do people tighten up the belt going into the holiday season, worried about these kind of headlines and worried about the future too?
It's amazing here in October October 1, John, to actually begin, 6 weeks late to begin to think about the holiday season. I have absolutely no clue what that looks like, other than I'm sure Amazon will move a lot of cardboard boxes around. John, to me, one of the things that's interesting, and I know Mike McKee will jump on this over the next 90 days, is the separation between goods dynamics and services dynamics across the entire economy. On the CPI and inflation, those are nicely separated into two partitions, and everybody has a chart that shows their dynamics. But what about everything else, John? What about service sector dynamics in employment versus in goods-producing economies, and the difference there in the pandemic?
Well, manufacturing versus services. Tom, manufacturing, you can turn that back on quite quickly, get the factories running again. Services, a much, much bigger challenge. We've seen that play out in various economies around the world. From New York and London this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. We are 35 minutes away from initial jobless claims. 24 hours after that, we will have payrolls in America. With equity futures up 32, advancing around about 1%. The conversation turns to New Jersey next. The Governor, Phil Murphy, joining this program live on Bloomberg TV and radio. This is Bloomberg.
Just the African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
The Oakland African American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
On Friday, it is the main event. It is the U.S. payrolls report. From New York, this is Bloomberg.
is a new economic cycle. It's a new bull market. So ultimately, this will be a dip to buy.
This is a bull market that's under some pressure.
Investors who are expressing their views are starting to show more bearish sentiment.
Rates may never rise. That's entirely possible.
Inflation's not the problem to worry about at the moment.
It ultimately comes down to, do you have money or not? And if you have money, you can grow the economy and the households.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. John Farrow in London, Lisa Abramowitz and Tom Keene in New York. It is a fourth quarter across economics, finance, and investment. It is a fourth quarter with an election in it. I love, John Farrow, what Kevin Cirilli said. Is it going to be not election day, but election month? We'll have to see, hearkening back to Bush Gore. But also, John, just simply the lift in the markets, the research note of the morning, Ben Laidler at Tower Hudson, John, looking for a melt-up.
Looking for a melt-up, Tom, but right now I think we're looking down to D.C. and playing headline roulette around fiscal talks, and there's nothing more frustrating than that. It's been months and months and still a gap apparently that is narrowing a little bit. Now, Tom, one thing that we don't know, one thing that we can't figure out is whether this is just posturing ahead of the election or whether both sides, both parties actually want to nail down a deal this week. And from what we understand, House Democrats delaying a vote on that $2.2 trillion plan to see if talks today actually generate something positive.
Well, we'll have to see there as well. And, of course, John, opening up here with the markets. Futures up 32, Dow futures up 244 in a nicer lift. John, I've got to go to David Weston's conversation with Speaker Pelosi, which I believe we see in the 12 noon hour today. And you wonder if she can make an announcement in that interview.
You hope that she can make an announcement. I imagine she won't want to negotiate with Republicans via that interview, Tom, but it really sets the stage for the talks for the day ahead. Who's got the biggest incentive to move the dial here? The Democrats to come in, come down, or the Republicans to come up? The economic data will determine that, but I think the headlines of the last 24 hours for anyone in government at the moment are not pretty, from some of the biggest companies in America. And I know I sound like a broken record. What we had months ago was a big shock to this labor market. What we didn't get was an income crisis because of the fiscal assistance. That fiscal assistance in the minds of many, Tom, still very much needed.
Well, we need a one-hour conversation with our guest to open this on Bloomberg Radio and Bloomberg Television worldwide, and we particularly welcome Bloomberg 1130 across the state of New Jersey. He is a financier with his career at Goldman Sachs. He is a diplomat with his public service to the nation as ambassador to Germany, but now he's in the trenches, the governor of New Jersey, and we're thrilled that Phil Murphy could join us this morning. Phil Murphy, what do you need from President Biden when he shows up in January?
Tom, good to be with you. Good to be with you all. We need it before January. I echo yours and John's comments. I can't say enough good things about Speaker Pelosi. I think Steve Mnuchin's a reasonable guy and a smart guy and interlocutor. We need a deal. We need a deal before January, and that has to include state aid. Obviously, extending unemployment, help for small businesses, all the needs that we know about. But we need a big jolt of state aid. I think if it becomes President Biden, and that's where my money is, that's where my support is, I would suspect we'll still need more of that. My guess is whatever deal we get may not fit the bill, and big investments, not just talking in infrastructure, things like the Gateway project, which you guys know well, which is the most important infrastructure project sitting there to be done in the United States.
Phil Murphy, you grew up in Needham, Massachusetts, where you learned the marginal value of a Red Sox victory. You went to Harvard and did economics, where you learned the marginal dynamics of economics. You're dealing now with the biggest marginal problem in the country. The millionaires are going to leave, added up, 10.7% above $1 million. You've got the 2.44% property tax, and you've got a lovely sales tax as well. There's no incentive. What are you going to do? What are you going to say to the millionaires that watch Lisa Abramowitz every morning?
Tom, you'll appreciate it. I don't see it that way. I haven't been holding my breath on the marginal value of any Red Sox wins this year, given the season they had. Listen, we were successful in asking the wealthiest in our state, the biggest corporations, to pay a few more pennies on their top dollar to help us continue a historic reinvestment in our middle class. That's good for everybody. The thing that chokes people in New Jersey, the folks that we lose, are the retirees who have a home, whose kids have graduated from our #1 school system in America, by the way, is property taxes. So that's why our budget has a huge dose of direct property tax relief. New Jersey is the state to raise a family. We want to keep it that way. We're also a quintessential middle-class state, and asking the wealthiest among us to help us make those investments is good for the middle class.
Come on, Governor, the movers, Governor.
It's good for them.
The movers are moving out. They're not moving to Massachusetts. They're not moving to Connecticut. They're moving to the 9 states with no sales tax. What are you going to do to turn United Van Lines and the rest of them to turn those moving vans around?
Tom, it's very simple. To give more of what they've got right now, the best state in America to raise a family. If you've got kids who are school age, if you're working, if you care about healthcare, we have the #1 healthcare system in America, quality of life, location. If you care about talent for your business, there's no better state in America. You get what you pay for in New Jersey.
Governor David Tepper left back in 2015. You'll remember the headlines. Is he coming home? Can you confirm that?
I've heard that. I have not spoken to him personally, but I have heard the same, John, as you have heard, and we welcome him back. Actually, our number of millionaires over the past number of years is growing, not shrinking, notwithstanding the noise around moving vans. Our state is actually growing, including among the wealthiest.
Where else will you be able to raise taxes? We've heard again and again about the prospect of doing something around cannabis. Is that just the low-hanging fruits for you now, Governor?
John, it's on the ballot on November 3rd as a referendum item. I wish we could have gotten it done through a legislative process. We couldn't find the last few votes, so it's on the referendum. I'm strongly supporting it. First and foremost, for social justice reasons. Low-end drug crimes are the biggest reason by far that we have young persons of color, especially young men of color, in our criminal justice system. But to your point, beyond that, this is a potential significant over time revenue item for the state and a job and a source of job growth, which are also positives. I hope we'll see it pass in November.
Just quickly here on the tax on electronic trading, are you going ahead with that?
Hey, Lisa, we're exploring it, taking it seriously. We did not score it in the budget because there's too much uncertainty around it. It's something that we're taking very seriously and studying very seriously.
In the meantime, the virus is continuing to spread, and we're seeing some worsening numbers in New Jersey. What is the threshold at which you will shut down in-person schooling and go back to all remote?
Yeah, so Lisa, one of the blessings we have in New Jersey is we've got hundreds of school districts. So we reviewed each and every one of their plans when we shut in March, and each and every one of them when we reopened in September. So that will overwhelmingly be a local specific decision, and that's what's actually playing out. The back to school for us so far has been very successful. We've had only 11 outbreaks in school buildings out of over 3,000, touching 43 kids and educators. We take every one of those seriously, believe me, but that's well within any expectation. I hope we never get back to the point we were in March, Lisa, where we had to make a statewide move to shut everything down. Please, God.
Governor, one final question, if I could, and it is a question of delicacy within this pandemic as you've confronted it and Governor Cuomo confronted it early on. We now have a touch point of a new pandemic that crosses over to religion, where you need to work with these zones, these small communities, in this case with Orthodox Judaism. How are you going to dovetail your pandemic response with the need for religious freedom? How do you do that? How do you execute that in the coming days in Lakewood, New Jersey?
Yeah, Tom, I think we've been able to do that from the get-go. We clearly had a period beginning in mid-March where we had to shut everything down. And when we did that, we were in close contact with the leadership across the whole spectrum of religions, including the leadership in Lakewood. And as we've been able to reopen and get back to worshiping first outside and now inside, it's been done under strict limits, capacity limits, face masks, social distancing, all the stuff that we all know. We've been in very close contact with the leadership in the community, as you can imagine, over the past couple of weeks. I'm actually going to be in Ocean County tomorrow, where Lakewood sits, and I can't say enough good things about the cooperation of the elected leaders and faith leaders there. But we are having an issue with the transmission from that cooperation down to the man on the street and we got to nip it, and we got to be aggressive about it.
I'm not going to mince words, Governor. I mean, one final, I guess, question. This comes in from Michael Barr in Bloomberg Business of Sports. Is it your fault the Giants and the Jets are as bad as they are? What are you going to do? What are you going to initiate? This is a state embarrassment. First of all, they're the New York Jets, the New York Giants. You own them. God love you. That's great that they're in New Jersey. They are terrible. Do something. What are you going to do?
They're owned by great families and great organizations, but they're off to a really tough start. There's no other way to put it. And by the way, South Jersey roots for the Eagles. They're 0-2-1, so we got 0-8-1 with the 3 pro teams that people follow in our state.
The governor doing the math. Do the math and the taxes as well. He is the governor of New Jersey, Philip Murphy. We're thrilled he could join us this morning. John?
Just for the record, Tom, the governor prefers English football over American football. And if he was still with us, he could confirm that. But unfortunately, he's not.
I find that's un-American. It's un-American.
Hey, with the way that the Jets and the Giants are playing, it's not un-American. It's just survival.
Yeah, you nailed that, Lisa.
Thank you.
No question about
Nailing it every day.
That, Lisa.
John, this thing with the taxes is serious.
Follows.
John, this thing with the taxes is really, I'm sorry, 10.x% is way bigger than 9.9%.
Tom, do you know what people are really frustrated about in New Jersey? You know, because we know so many people that live there. Property taxes.
Yeah.
That's the problem.
Yeah.
That's what it keeps coming back to.
Add it
property taxes. And as you pointed out, that's why people are going to leave. And as for the suggestion that it's a great place to raise a family, I'm sure it is for many other reasons. But if you've got to pay serious property taxes on your property, guess what? Come to the UK where there are no property taxes and you just pay the tax up front.
Is John Bon Jovi going to leave New Jersey?
Maybe.
John Bon Jovi can't leave New Jersey. That's
the really important stuff. You know, my favourite part of this show is when you and I just talk past each other for several minutes and don't listen to each other.
That's every day.
Yeah.
The mute button,
basically,
there he goes.
Every day. Seriously, I'm actually going to get a mute button for Christmas. If someone can send me a mute button, I'd love one to use right here on Bloomberg Surveillance.
Bruce will never leave.
With the First Word News, I'm Ritika Gupta. President Trump signed stopgap legislation that will avert a government shutdown. It will keep the government operating at current spending levels through December the 11th. The country's spending authority expired at midnight. Neither Democrats nor Republicans wanted a shutdown weeks before the election. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin say they've made progress on a compromise stimulus bill. They plan to continue negotiations. Mnuchin tells Fox he sees an agreement costing as much as $2.2 trillion. And the Federal Reserve has extended its unprecedented limits on Wall Street bank dividend payments and buybacks. Those caps now won't be lifted till the end of the year. The Fed blamed economic uncertainty from the coronavirus pandemic. Plus, it says the banks need to preserve capital. JP Morgan had already indicated it wanted to resume share buybacks. The European Union has started legal action against the UK over Brexit. Bloomberg's learned the EU will send a letter accusing the UK of breaching the terms of the agreement and breaking international law. It's the first step in a process that could end up in a lawsuit at the European Court of Justice. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
They're positive numbers still, but obviously if you look at total payrolls, there were 4.8 million in June, 1.7 million in July, 1.4 million in August. So if you get something like 400,000, I think people will extrapolate and start speculating about the possibility we get a double dip in the fourth quarter.
Payrolls 1 hour, 12 minutes away. That was Jim O'Sullivan, TD Securities Chief US Macro Strategist. The open is 1 hour, 12 minutes away, rather. The payrolls report is about 24 hours away. Claims, bottom of the hour. Let's get to the price action. Equity futures shaping up as follows. Shifting higher on the S&P 500. Futures are up by around about 1% this morning. Call it 0.8%. In the bond market, yields to 0.6988. Call it 70 basis points on a 10-year. Foreign exchange, euro dollar. What a whippy quarter we had. Breaching 120 very briefly off the back of the happy talk in Europe. Happy talk came to an end last week. In a market this morning, though, all about a weaker dollar. Euro dollar advancing. The Aussie advancing by about 0.6%. Even sterling catching a bid with the Brexit mess. First time I've mentioned the word Brexit this morning. That'll be the last two. Looking at the commodity market, crude 39.50 cents on WTI, Tom.
Off the bottom, John, in March, that's when I really loaded the boat on the triple leveraged all cash fund, already totally wrong. John, we're up 39%, call it 85% annualized in March. What'd you do in March, John?
What did I do in March? Sat in a TV studio that happened to be in my living room and stared down the barrel of the camera and didn't go outside. What did you do in March?
That's what we did. I mean, that's what we've done, and maybe that's the mood that gets us away from the markets as well.
Back,
yeah.
Quarantined.
I'm sorry. I mean, you know, you look at time off. Come on, John. 2020. You look at first quarter. You look at second quarter. We're all worried about real-world pandemic things, and the markets move on and on. Gaurav Malik is with us now with State Street Global, their chief portfolio strategist. Gaurav, I want you to look back here, day one, Q4. How did you do this year? Were you as lousy as me?
Not that bad, maybe.
Thank you.
We've been biased.
That was gold, by the way.
I have to make a call. I haven't seen your portfolio. What I will say is that we generally, heading into the year, was certainly biased towards growth assets. Then, pandemic takes hold. We did start building in incremental hedges around gold most dominantly. And our economist, I know she's been on Bloomberg a few times, Simona, does probably, I would say, better than consensus in terms of growth expectations. That keeps us biased towards growth assets, although I would say that bets have come in. And as we get into the election season, again, reducing bets a bit, but still, I would say, overweight equities, still like spread products, so corporate bonds, IG, high yield, and to the extent clients are interested in EMD, we've been offering EMD as well. So we think that that spread game, growth game, that continues to go in as we look at Q4. Important, as I said, to build in some incremental hedges.
All right, well, Gaurav, let's go to Tom's mainstay. Let's talk about cash. What is the appropriate amount of cash to hold?
Well, it depends a bit on where you are in terms of your aggregate growth assets, how much hedging you want to build around that. I think some amount is warranted to be held in cash simply because of the fact that, as we get through the next few months, as we find out what's happening with vaccines, what's happening with COVID, you do want to leave some dry powder to make sure you can make those shifts in your portfolio, make sure incremental, assets can be added on. So I think holding some amount in cash is important. I would say that many of our active funds are probably somewhere near the higher end on cash. That's what we'd be holding right now, keeping that scenario in mind that we do want some dry powder.
Okay, this is the interesting thing. It seems like the consensus right now is trying to thread this very narrow needle where basically people are looking at near-term volatility and a lot of uncertainty, but longer term, a lot of people think we are at the beginning of a market. Is that sort of your view as well? And if that's the case, are you barbelling it? More cash, but also riskier assets on the equities and the credit side?
Yeah, I think that, so one is that we do take a view that investors should be biased somewhat towards growth assets. So I'm not ready to make the call and say that there is a bull market underway. I think earnings will drive that direction. And I think one thing we should keep in mind is that when you think about, you can ask anybody, they'll tell you like valuations right now, S&P or choose your market are at a high level. We normally tend to take, I would say, at least a 1 or 2 year perspective on valuations, which means that, the pattern you see with valuations is that the PE spikes up, whether you look at FI1 or FI2, and then you wait and see do the earnings catch up to that PE. So I think that, yes, equity is a good place to be, but we really need to see how does 2021 earnings shape up, because that will tell us that are the earnings catching up to the PE or not, and that would definitely drive that direction.
Gaurav, with where we are with the nominal yield across all of fixed income, does that lead you to a more diversified or a less diversified approach?
So I think that one question that is always on our mind is that one thing we've observed as we look at the period post, call it GFC post 2010, is that the US dollar and US rates have been a big factor in driving a whole range of assets. So if you take out, I would say, narrow set of growth assets, anything in the cyclical space, anything in the value space, has really very high correlation with either what the dollar is doing or what rates, commodities, classic cyclical things, how they're behaving. So I think it does make sense in some ways to think about periods of dollar weakness to diversify into other assets. So incrementally looking at EM, incrementally looking at European assets, and then trying to find pockets within that universe which may not be as correlated with the dollar. So things like, growth, Chinese consumption, those things are good places to go to for investors as you look to build out a more diversified portfolio.
Well, Gaurav, just a quick one from me, if I may, and I don't mean to get too cute about this, but is the dollar at the mercy of risk appetite, or is risk appetite at the mercy of the dollar?
I think that, dollar to some extent is at the mercy of risk appetite. I think that what you're looking at right now, well, let me step back for a second. So I think one thing for sure is that, things that were holding the dollar up, yield being a good example of that, demand occurring, et cetera, in the initial phases of this crisis, the expectation perhaps that the U.S. is going to do better, I think those supports are gone now. So on a long-term basis, you don't have the yield support, which means that it's a bit of a risk appetite in some ways, right? That, if we think that the COVID situation is getting handled better in the U.S., you're going to see investors rush to the dollar. But I think on a long-term basis, we do see a secular decline occurring in the dollar.
Gaurav, you can come back anytime. Gaurav Malik of State Street Global Advisors, outperforming Tom Keene. Just getting that out there up front at the start of an interview. That's how we like him, Lisa.
Yeah, no, honestly, these are the big questions here as we go forward. And the question that you asked about the dollar is key. A lot of people looking at it as the driver, but in my view, I think it's the haven right now.
You make jokes about it, the way you two beat up on me. I get it. But, John, it's just amazing the missed opportunities of not participating in the market.
He's just waking up to this now.
For a moment. For a moment, you
there's like
genuinely
a
looked upset.
once-in-a-lifetime event, then there's another lifetime event.
Do you know how many messages I get sometimes of people that feel sorry for you, and they're asking me why I'm being mean to you?
He's just for the people on the radio. For the people on the radio,
if only they knew.
Tom has a mute button on him, and he's gesticulating wildly.
Lisa, for the people on radio,
there it is. Okay,
they're
so
the lucky ones.
I don't have the mute button. Pharaoh has a mute button.
You're damn right. This is Bloomberg.
Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company.
Okay, ladies and gentlemen, as you can see, I'm placing an order to sell 4 positions on euro at 118.567, 118.25, 117.41.5, and 116.20. The stop, as you can see, is in yellow color. So let's see, it's stop on profit on 4 these positions.
Okay.
Well, good morning. We're looking at initial jobless claims coming in a little bit lower than forecast. Remember, these are the seasonally adjusted numbers, and there's not a long time series because they changed the way they calculated it. 837,000 last month was last week rather was 870,000. So a big decline there. 850,000 was the forecast. Now, the number that we really want to see to get a better, more accurate description of what's happening with unemployment claims is non-seasonally adjusted. They fall to 786,942 from 827,205. So that's a decline of 40,000. The headline number from the seasonally adjusted, a decline of 36,000. So good news in both cases. Pandemic employment assurance assistance, which is the freelancer stuff that was put in place by the CARES Act, that rises by 35,000 to 650,000 during the week. So still some issues with that, according to the analysts who look at this and whether or not it's completely accurate. Total number of people getting benefits goes up by 485,000 to 26,529,000. So we're still seeing actually, I think what you would say about this report is it's status quo. We did see some declines in initial claims, but we're still seeing an awful lot of declines overall. One other number out this morning, personal income down 2.7%, but spending rises 1%. Both of those much weaker than the prior month.
Michael McKee, I took some fancy math here on your good study, and we had the correct chart up here, folks, on Bloomberg Television. On Bloomberg Radio, all you've got to know is if you take claims to logs, you get a gorgeous straight line, Michael McKee, from June 5th. Why is that? Why is it so well behaved from early June?
Well, I think it's just been sort of a consistent decline in the jobless numbers. Now, if you're using the seasonally adjusted numbers, it's difficult because you did get a series break in there about a month ago. But the non-seasonally adjusted numbers show that we have seen steady declines for the most part, a couple of weeks that were up, but we're still well above that 800,000 number, and we just stay in that range. As I mentioned, a lot of analysts now think there may be something wrong with the statistics. California's halted some of their reporting while they wait to try to figure out whether or not it is good or not, so whether the data are good or not. So it is something to keep in mind. That income and spending number, by the way, one of the interesting aspects of the number from the month of August is that we saw the decline in incomes of 2.7%. That likely reflects the ends of that $600 a week additional unemployment insurance. So the question is, over time, does that start to weigh on consumption?
All right, so just to wrap this all up, Mike, is your impression that the labor market is in better shape than the doom crew, like myself, may give credit to, given the fact that we get these tens of thousands of layoff announcements every day these days, it seems?
No, I'll go with you and your gloomy outlook. We can get together under a black cloud later today. The issue,
sunny spells.
The issue for people at the Fed and for analysts is that what we've got is a lot of people have come back to work because the restrictions are being lifted in many states. And then one of two things happens. Either they find out their company has gone out of business in the meantime, or companies, particularly in the service industry, restaurants, try to reopen and find they just don't have enough customers because people still aren't going back or they're capacity constrained, and they close down again. And that's going to be the issue going forward. The airlines are a perfect example of this because they took government money, they stayed open, they had to keep people on the payrolls until September 30th. Now it's October 1st. They don't have the business. They're getting rid of workers.
Get the cash and then resize. I hate the phrase right size. Resize. Much better.
Much better.
Thank you, sir.
Well said, John.
Thank you very much. Here's the price action. Equity futures still elevated. The move in the bond market gets your attention. Not a huge move, but relative to the nothingness that we've had for the last several months. Yields up by 2 or 3 basis points. The curve a little bit steeper, Tom, approaching 150 on a 30-year again. On a 10-year, we've breached that 70 basis points level by a single basis point. The move's there. The move's there for all to see.
Right now, James Sweeney with us with Credit Suisse. This is an incredibly important interview because we keep track of the tone of our great guests, our great economists. James Sweeney, hugely optimistic on a European recovery amid the deflation gloom of a couple years ago. He's gotten really cautious on the American economic experience. James Sweeney, I am thunderstruck by the percent of companies firings. It's not 3 or 4%. It seems to be a much bigger number. Is that surprising to you?
No, it's not. It's not surprising. I think there's three categories of problems for the labor market. One is that you have companies with damage to their earnings, to their balance sheets. Their labor demand is lower. Second, you have companies whose sales outlooks are still impaired because they know the economy out there is weak and they know the pandemic is still going. So their labor demand is lower. And then third, you have companies that just from using Zoom or other changes to technology use or just pandemic life changes have maybe recognized that they could get by with fewer workers from a longer term perspective, which might be a productivity boost for them overall. But that leads to lower labor demand now. And I don't think all three of these factors have been fully activated through the pandemic, and the layoffs you're seeing now is companies responding to their particular circumstances and their particular mix. But this is a big issue because what it means is that labor income now has a big headwind when you add the fact that that extra unemployment income has been taken away at the beginning of August, and the fact that that state and local governments are straining and maybe reducing some workers as well. You're losing quite a lot of income support under consumption, which as recently as a few months ago was extraordinarily well supported by policy. So the momentum shift happening in the economy is large.
Let's build on this, James. The idea of the momentum shift also away from the lower income workers that were the initial victims within the pandemic layoffs to the higher income workers that we now see. I was just looking at some data today showing that bank cuts that they have announced so far are on pace to top what we saw last year. Insurance companies are cutting. You're seeing energy companies cutting jobs. As these higher paid jobs get eliminated from the system, is that trickle-down effect, the other jobs, the lower income ones that those support, is that weakness being adequately accounted for in the current projections?
Well, I mean, I think this is why when I think you talk to a lot of economists, including myself, you're going to get a cautious tone about the speed of the further decline in the unemployment rate. So you're not going to hear a lot of people say we're going to have 5% unemployment within 12 months or anything like that. So again, I would take it back to those three factors I've mentioned. Some of this is forward-looking, some of it is backward-looking, and some of this is really just tweaking and trying to gain efficiencies, maybe some efficiencies that have been realized, but were not recognized before the crisis. And we're just going to have a lot of this at one time, and it's really going to slow the return of about 12 million, 13 million missing jobs that we have in the economy overall, and that lowers income. And if you add to that, a failure to get a fiscal stimulus done, so that the government is not helping anymore on that incremental income, then spending is going to have a real problem.
James, slightly academic of me, so forgive me, but looking further out, a few years further out, what do you expect the participation rate in America to look like, given the shifts that we're seeing and some of the permanent changes as well? You hear governments throwing around the words training, retooling, and things like that, and I always sit here and just think, you first. You go away and get a new skill set. It's not that simple. James, what do you think the participation rate in America looks like for years to come?
I think it will rebound. I think it will rebound nicely. I mean, if you're looking at the big shifts in participation over the last 10 or 15 years, you have to account for the demographics. So the fact that baby boomers born after 1945 started turning 65 in 2010, really? Meant that total participation for the economy was really destined to move lower as that cohort moved out. But if you adjusted for that, you would find still some missing workers, some non-participants, and this was deeply injured parts of the labor market going through that 08 experience and maybe experiencing some social troubles which were intensifying at the same time. So a lot of progress has been made on those things, and on demographic adjusted participation measures, we've actually gotten back to pretty decent long-term levels, again, accounting for that aging. But now you have this, and you have this hole in 12 million jobs. And even if we have a decent rebound and the unemployment rate does get back to respectable levels, within a year or two, we probably will have again, some groups, some cohorts which are injured, which are damaged, where there's been some skills atrophy, some disconnection with firms, and some people with persistent difficulties in resuming. So, so I'd expect mean reversion in participation over time, but I would subtract a little bit from that due to long-term consequences for particular workers.
James, just a final one from me. I'm thinking about a very specific cohort, maybe late 60s in the journalism business. Do you expect this particular cohort to? Yeah, those kind of people. James. Yeah.
Also, I'm placing an order to sell Japanese yen at 105.593. Okay, order placed to sell Japanese yen at 105.593. Hopefully everybody can see where this position came from, because hopefully nobody's stupid. You can see on the ticker that we purchased Japanese yen at this price yesterday, I think, or before yesterday. Okay, so now I want to sell it. Speak to you later, guys.
Go right in and say, give it up.
Seriously?
Is that what they say to you?
What would we do without you?
Oh, they got the T-shirt like Biden had made off Trump, in the debate, It's.
What would we do without Tom?
Yeah, something like that.
He nails it every day.
Question.
The T-shirt says, hit the mute button.
From New York and London.
When do you go to your next property?
In a minute. I can go now if you like.
Please.
With the First Word News, I'm Ritika Gupta. The presidential debate format will change in the wake of Tuesday's chaotic showdown. The commission that runs the debates won't say what changes will be made, but it said it wants to ensure a more orderly discussion of the issues. Joe Biden says candidates should be allowed to speak uninterrupted. The Trump campaign says the changes are, quote, moving the goalposts. The next presidential debate is October the 15th. Joe Biden hammered President Trump on the economy during a train trip across the Rust Belt. Biden was speaking in 7 cities through eastern Ohio and western Pennsylvania. President Trump campaigned in Minneapolis. The president signed an executive order aimed at expanding domestic production of rare earth minerals. That may help with voters in Minnesota's so-called Iron Range. It also would reduce dependence on China. And American and United Airlines will start laying off thousands of workers the next few days as scheduled. Both promise to reverse the furloughs if the government agrees to provide additional payroll aid in the next few days. American plans to lay off 19,000 workers. United will cut about 13,000. And Rolls-Royce plans to raise up to $6.5 billion in new financing. The jet engine maker's reserves have been shrinking because of a collapse in demand for the planes it powers. The financing includes a rights issue, a bond offering, and loans. Shares of Rolls-Royce are down more than 80% this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
defying this retail downturn?
The function of luxury, I think, since the very beginning is the same, is to give pleasure to people. And probably in this period of time, people need pleasure more than ever.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
COVID-19 has disrupted a generation of workers, hitting younger people the hardest, and the interruption will take a financial toll.
I think there's already some damage to young people that's going to take them a decade to reverse.
There's a real threat to what's going to happen to these folks throughout their career.
I'm Lisa Abramowitz. Join me for Generation Interrupted, a special report this weekend on Bloomberg Television.
Blessings we have in New Jersey is we've got hundreds of school districts. So we reviewed each and every one of their plans when we shut in March and each and every one of them when we reopened in September. So that will overwhelmingly be a local specific decision. And that's what's actually playing out. The back to school for us so far has been very successful. We've had only 11 outbreaks in school buildings out of over 3,000, touching 43 kids and educators. We take every one of those seriously, believe me. But that's well within any expectation.
The governor of New Jersey, Phil Murphy, on Bloomberg Surveillance earlier this morning, live on Bloomberg TV and radio. Your equity market shaping up as follows. 42 minutes out from the opening bell in New York City. Equity futures elevated. A game of deal or no deal on Capitol Hill, except it's not a game, it's serious. Futures up 28. We advance 0.8%. We will get the view of Chris Harvey of Wells Fargo, the head of equity strategy, on Q4, Tom, out to 2021.
Q4 here, the first day, and it's good to get a number of these people lined up here. Everything from Ben Leadler's melt up out to some real caution I heard this morning as well. If you need real caution, there's no other place to look than real estate. And maybe not, selected suburbs booming as people leave cities, but in commercial real estate, the operative word is grim. Rebecca Rocky keeps score at Cushman & Wakefield is global head of forecasting with 4, 5, 12 degrees from Penn State, also work out of the Johns Hopkins University. Rebecca, good morning. I love your report and the mathematical acuity. Let me go to the price dynamic. Why aren't rents going down, or do you predict they will plunge?
Hi, well, good morning, and thank you for having me, and thank you for that feedback. For rents in the commercial property markets, it takes time for asking rates or face rates to start to move, and so that's not unusual. It happens at different paces in different regions that we cover in the report, but certainly in the United States, what we see in the aggregate across the country is it takes a few quarters for landlords to be willing to move that price. What does tend to happen a bit sooner is that we start to see increases in concessions, in free rent, and those sorts of things, which sort of serve as a precursor to movements in the asking rate.
Which is how you're forecasting this forward. And in your report, you predict that it's going to take until 2025 for office rents to get back to where they were pre-pandemic, and that rents will decline nearly 11% over the next 2 or so years. What about the coastal cities in the United States? How much more will office rents decline there?
Sure. I think, when you think about where there's more risk versus less, it's not necessarily coastal versus non-coastal, right? So I think where we're going to see a greater potential rent correction is possibly in markets that have higher levels of construction coming to the market relative to the size of the market, where we also are potentially expecting greater declines in demand. And that's not just markets that may have a construction wave headed their way. There are a number of markets that maybe don't have some of the demographic backdrop to support future office job growth that other key markets have.
Wait,
so
Rebecca, this is key,
Sure.
and I apologize for breaking in here, but everyone seems to think that the biggest cities are going to empty out and become ghost towns of office buildings that are relics from another era. What you're saying is completely different. I'm guessing that you're talking about secondary or tertiary cities that have been building up recently in the response to people moving in recent years. Those might be the hardest hit. Am I right?
I don't think we know the answer quite yet. There's a lot of noise in even the residential data when you look at some of these gateway cities versus lower cost cities. On the margin, we have seen some movement. How temporary versus permanent that is a big question mark. And for these big cities, I think what's also key is most international borders are shut down. And it's very typical of Los Angeles, Boston, New York, D.C., Miami to have international migration serve as a source of population growth in those cities. So, this is not unusual.
Rebecca, I want to go back to the balance sheet and the income flows of commercial real estate, and of course, Cushman & Wakefield, with their venerable history back across the 20th century. Rebecca, is this going to be worked out on a balance sheet where, there's bankruptcies and things clear and loans are written down, et cetera? Or is it going to be worked out on the income statement with reduced cash flows, reduced rents? Which way will that cut?
I think it may be a little bit of both. We're certainly working with our landlord clients to protect those cash flows, but in the event where that's just not necessarily something that can be done, that's certainly going to be idiosyncratic in nature. We may see it play out a different way.
Rebecca, what's fascinating to me, and Lisa and I live this, is I know there's Class A, Class B, Class C, D, E property as well. When you drive down the streets of any city in this country and you see the retail apocalypse because of Amazon, because of the pandemic, how does Rebecca Rocky think you clear that market, all those empty storefronts?
Yeah, the way you clear markets is for pricing to adjust. So I think that that's something we're witnessing.
Rebecca,
in real time.
I don't mean to interrupt. Lisa interrupted, so I get to interrupt. We do balancing interrupting, Rebecca. But Rebecca, what are we waiting for to have those rents come down?
I think we're waiting for transactions, right? It's a frozen market at this time, and there's still a lot of uncertainty. So when we're talking to clients, they're doing an exercise of information gathering. They're figuring out and waiting very likely until we have some degree of more certainty. And that's really hard right now because unlike other recessions or down cycles where it was truly market-based sort of shocks, we're dealing with something that's fundamental ambiguity, right? A medical crisis, trying to figure out how that translates into the economy and real estate. Fundamentally more difficult exercise.
Rebecca, thank you so much. Very valuable. Rebecca Rocky with Cushman & Wakefield there on commercial real estate. Lisa, you got all fired up there and you were as rude as I am. But these are serious. Lisa, I don't understand when you and I go down Lexington or name the street in New York or Boston, Washington, whatever city, what are we waiting for to clear the markets? I just don't get it.
Yeah, well, there was a theme that perhaps some of the real estate investors were allowing those shops to remain vacant so they could write them down as a tax break, right? There was some theory about that. Now that's not going to work. I'm just wondering what types of shops are even going to fill those places, because it's not going to be the chains in the same way. Is it going to be another bank branch? Is that what we're getting?
I think it's a great question, and you know the jury's out on this. Other than the fact I see more and more cardboard boxes every day, you know, down at the walk-up. I mean, you know, it's you know serious stuff. Let me do a data check here. Up 24. Pharaoh's apoplectic. The 30-year bond out to 1.4907. Abramowitz taking massive losses on bonds today. Price down, yield up. 10-year yield, Lisa, 0.71%. I mean, come on, Lisa, is it a yield breakout?
This is a yield breakout. This is stop the presses. We're actually getting movement here. And actually, you're seeing inflation expectations tick up, too.
My word. The excitement of the first quarter. The first day of the fourth quarter.
Gripping.
Speaking of excitement, seriously, folks, the interview of the day on politics across all of Bloomberg, David Weston with the speaker in the 12 o'clock hour. Stay with us on Bloomberg Radio and Bloomberg Television.
Position closed on Japanese yen at 105.593.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell. Equity futures up 24. We advance 0.75%, and we begin with the big issue. Deal or no deal on Capitol Hill. The gap slowly closing in Washington. Details still remaining vague. Secretary Mnuchin indicating they've come up from $1 trillion. House Speaker Nancy Pelosi indicating they had a detailed exchange, and those conversations will continue, pushing Democrats to hold off voting on a $2.2 trillion aid package. With Senate Majority Leader Mitch McConnell suggesting it's full of poison pills. All of this leaving investors facing down another trading session, playing headline roulette.
The whole focus is on fiscal stimulus.
Stimulus questions in the U.S.
Getting fiscal stimulus going.
I do think we'll get it. It's not impossible, but it's very unlikely. It could be a 2021 situation, which is going to be tough.
If we don't actually have Steve and Nancy successful,
there's more hope than the street has expected.
You definitely see a pullback in equities and credit.
As long as the economy and the markets keep roaring forward,
It's not clear that we need it.
it's very unlikely that Republicans give Democrats what they want here.
We need something big, and we need it, frankly, very quickly.
If we need it, we'll get it.
So that we can maintain on a road to recovery.
If we don't need it, well, then great. Then the recovery goes on without it.
Let's bring in Kevin Cerulli for more, shall we? Bloomberg Chief Washington correspondent. Kevin, is it posturing, or are we close to a deal?
Posturing. Look, I think that based upon my reporting and the sources that I talk with on both sides of the aisle up there on Capitol Hill, that window is still closing in terms of there being a significant type of stimulus, a massive round of stimulus before the election. I'm told, should they actually get to some type of deal, it would be a bare bones, I don't even think you can call it skinny, a bare bones a deal that would inject some new stimulus to specifically target not just small businesses, but some of these industries that have had their funds dry up. I'm thinking of the airline industry in particular, where lawmakers and rank and file members, not just leadership, not just the White House, but rank and file members are coming under intense pressure from these industries to actually get to some type of skinny deal. You know, I say all of this as we inch closer to election month on November 3rd with election day, and not just the attention that rightfully is being looked at the White House and the presidential level, but also take a look at the Senate. Because if you take a look at Republican control over the Senate in the terminal, you'll see this decrease of expectations and the increase of volatility and risk that Republicans lose control of the Senate, Jonathan. And that really, quite honestly, would inject massive amount of an increase in chances of there being more stimulus in the next round of Congress.
So, Kevin, look, we've had a standoff down in Washington now since the end of July. And I'm trying to work out who's got the biggest incentive to move the dial here. Republicans to come up or Democrats to come in and come down? Who is it?
Well, I'm going to add one more cast of characters into that position, which is that in a lame duck, regardless of party, those members that are voted out of Congress have a huge incentive to compromise, especially as, quite honestly, they're in the job market. And so all of that starts to pile into a carefully crafted need for there to be some type of more economic stimulus. And dare I say, should Democrats actually take control of the House and the executive branch, there would likely be another round of stimulus on the horizon in February or March.
I'm less worried about them and much more worried about everyone else. I think that's fair to say.
Yeah,
Kevin, great to see you as always. Kevin Cerulli, down in Washington, D.C. Thank you, sir. Price action set up as follows. 26 minutes out. Equity futures are positive. Up nicely. Last 24 hours, the data really improving in America. The S&P 500 up 25, advancing 0.75%. And seriously, your breaking news. We have a move in the bond market. Yields up 3 basis points. Your 10-year through 70. Your yield, 0.71%. Here's a take from Chris Harvey of Wells Fargo weighing in on the election and markets. He writes the following. We believe a Trump win would be a higher beta on our already positive equity stance, as it would reduce uncertainty and stave off Democrats' less business-friendly policies. Chris Harvey, the contrarian, dare I say, he joins us right now. Now, Chris, the reason I call you a contrarian is because I've had people lining up the last couple of days, I'm sure you've heard them, saying that what we need is a Democratic wave because they'll be the big spenders. Why'd you take the other side of that, Chris?
So we just went back through history, and we also looked at party platforms. And if you go back through history, yes, the Democrats typically are, or the returns to the equity market are typically better But when we look at the party platforms, specifically in and around taxes, and more recently, their less business-friendly model, it's hard to see under a democratic regime things going much higher and being much better. Could we see more spending? Yes, absolutely. But that starts to weigh on taxes, that starts to weigh on the businesses, and really it starts to weigh, potentially it weighs on fundamentals. So we're not negative on a democratic regime. We think the equity market goes higher in either one. It's just a higher beta with a Republican administration.
Well, let's take that argument away and just focus on the path forward, regardless of the election, which is something original right now, Chris, because that's hardly a conversation many people are having at the moment. Why do you think it is almost irrelevant what happens in Washington for the direction of markets? And why do you consider it just to be travel north into 21?
Well, we got to thinking about the first Bush versus Clinton election, and it was the quote-unquote, the economy stupid. And what we're looking at right now is we're looking at a situation where we have a COVID, or we believe we have a COVID vaccination coming down the pipe before year-end. And that's a real positive for the market. Two, the amount of accommodation on the table, or fiscal accommodation, monetary accommodation that's on the table is just incredible. It's really hard to wrap your hands around. And the Fed has told you we're going to keep rates at zero for a financial eternity. And the last thing, and we've talked about this time and time again, you have exceptionally easy comps for many companies in the first half of next year. And that low bar, we think many companies can step over, and that gets us more constructive, more positive on equities longer term, no matter who's in the White House.
Chris, in about 10 minutes, I'll have a conversation with someone else, and it'll sound completely different when we start to talk about the job losses being announced by large multinational companies. The Walt Disney Company with a huge headline of almost 30,000 jobs. Chris, how do you process them as a market analyst right now, a market strategist, thinking about what's happening with some of these large corporations making huge job cuts, and a market that you think is still going to go higher?
So typically the job cuts are a lagging indicator. What do we see that's positive, that's constructive? This week we had a very, very strong consumer confidence number. If we go and look at the consumer again, the housing market in some cases is on fire, and prices are going higher. That's a very positive sign. And then if we look at savings, the savings rate is still above $3 trillion. No doubt there's parts of the market that are having a difficult time. And we know that we've been in a very aggressive recession, and we're still seeing the effects of that. We're not out of the woods. We're not going to be out of the woods. But things are slowly grinding higher. Things are slowly getting better, and that's the key. The market is a forward-looking mechanism, and a lot of the key indicators of forward-looking mechanisms are constructive.
Discounting a lot of the good stuff in the future, that's for sure, over the last 6 months. Chris, let's talk about allocation. Where in the equity market to what, and what theme?
Can you say that one more time?
Sure, Chris, I'll repeat it again. Just in terms of your allocation into the equity market, to what and to what theme?
So with regard to equities, our year-end price target has been and remains 33.88. So there's a little bit more upside, but not a ton, right? We're thinking about more upside in the new year. Right now, what we're talking about, what we're telling clients is you want to rotate. You want to start shifting that portfolio into things that haven't performed as well, things that have higher, what we call quote-unquote COVID beta, that will do better when COVID becomes mitigated. And we want to get more exposure to cyclicals and companies that have very easy first half comps. So it's really about composition of the portfolio, not so much about market direction.
Do the banks fit into that, Chris?
The banks, for us, they're a great long-term value, but before we get aggressive or very aggressive on the banks, we want to see some sort of COVID solution in the marketplace because they're one of your bigger COVID plays. And so tremendous amount of value. We just are waiting for a catalyst at this point in time.
Always waiting for a catalyst for the banks. At least we've got some high yields this morning. Chris, great to catch up, as always. Send my best to the team. Chris Harvey there of Wells. Equity futures up 0.7%, just off session high, still positive 23. As you move in the bond market, yields just starting to break out a little bit. The curve just a little bit steeper. Ahead of the opening bell with your movers, here's Abigail.
John, this morning's risk-on mood really expressing itself through the mega caps and the outperformance of the NASDAQ 100 futures, well higher than the S&P 500 futures. Not surprisingly, first and foremost, Apple driving those gains up 1.5%. 1.5%. And again, this isn't really about a fundamental change, but technical buying in response to the technical selling that we saw in September. In fact, over the last 10 days, Apple is now on pace to gain about 10%. So those dip buyers out. Also out for Tesla, plus the positive news that they have cut prices on China-made Model 3s for a cheaper battery. Nikola, the electric truck company, trying for a second big up day in a row, gaining 15% yesterday, up 11% today. Part of it, a report saying that GM may actually be considering a bigger stake than their potential 11% stake in the company. And then Palantir, yesterday coming to market. Today, its first full day in the pre-market, popping higher again, up 3.3%, the data software company. However, still below its opening price, but nonetheless, some of those private investors who have been cashing out probably pretty happy with the results around Palantir's direct listing, John.
Abigail, thank you. Looking forward to catching up with you around the opening bell. Coming up on this program, major firms announcing tens of thousands of job cuts in a single 24-hour period. We'll get the outlook for the economy with Megan Green of the Harvard Kennedy School. 20 minutes out from your opening bell. The cash open around the corner with futures up 22. The S&P 500 advancing 0.7% on a beautiful morning in New York City. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Friday, it is the main event. It is the U.S. payrolls report. From New York, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
He thinks we'll forget about how badly he mismanaged this pandemic and cost us more so far than 205,000 lives and counting. Almost 30 million people on unemployment insurance. He thinks we'll forget the reasons our businesses and our schools are closed is because he took no responsibility. He's a complete failure.
That's the view of Vice President Joe Biden criticizing President Donald Trump's handling of the coronavirus pandemic and economic fallout in a campaign event in Ohio, blaming him for the millions of Americans who've lost their jobs over the last 6 months. Bloomberg's Mike McKee joins us now for more on the headlines in the last 24 hours. Not pretty, Mike.
Not pretty at all, John. The latest news this morning is 837,000 people filed for initial jobless claims, which may be a bit exaggerated. There are questions about fraud and double counting and backlogs, but it still shows an enormous number of people are without jobs. And Joe Biden mentioned the almost 30 million who are getting jobless benefits overall. That number went up by 450,000 this past week. So it does show there are strains in the economy, and the labor labor markets out there that are going to be only exacerbated as we move to sort of phase 2 of this whole thing. We first had the initial job cuts, and then we had the initial rebound, and now we're starting to see there are places where jobs just aren't coming back. The airlines, American and United, cutting 32,000 people. They'd taken government money, and for that, they had to keep people on the payrolls till yesterday. Now they don't have to. Those people are gone. Disney earlier this week, everybody talking about that. And it's not just a U.S. thing, John. We're seeing big job cuts starting to come in Europe as well. Continental announcing it will cut or shift 30,000 jobs. Royal Dutch Shell losing 9,000 jobs. So this is a worldwide problem. And the longer this goes on without some sort of vaccination and without enabling us to get back to normal, the more jobs will just disappear.
Michael McKee, really quite concerning. As you point out, there have been 2 phases to this. Phase 1, the rush for liquidity, the temporary layoffs. As you've always pointed out, Mike, over the last few months, it's been about restoring jobs, not creating them. And now this is the moment that people look around, companies look around and decide how big they want to be. And I hate the word right size. I hate that phrase. They're resizing the business, smaller. Who says that's right? Much smaller, potentially. Megan Green of the Harvard Kennedy School weighing in on the U.S. labor market, and she writes the following: the U.S. job market